Missile. Germany's finance minister tells Bloomberg they reject Putin's demand for gas payments in rubles. And full throttle, Elon Musk's Tesla beats estimates and forecasts a bumper production growth. The shares jump in late trading.
Let's take a look at the futures, Tom. I like one of the entries that we have in our MLive program, which is basically, look at this, ECB hawkishness has gone mainstream in the Governing Council after that we heard from Mr. Guindos. That's repricing a bit of the German bonds, so look out for that. And the DAX futures and FTSE, futures actually gaining 0.3%. Jay Powell and Christine Lagarde speak today.
Yeah, where have all the doves gone from the ECB Governing Council? That seems to be the consensus. The money market's now pricing in 3 25 basis point hikes from the ECB by the end of the year. So we're seeing that repricing in the bond markets this morning across the Eurozone, and we'll get into that shortly. Certainly a sell-off, particularly pronounced in the peripheries, but also German bonds as well. And you saw repricing in the other direction yesterday when it comes to US sovereigns. You had the likes of Bank of America and Nomura saying, maybe there's a buying opportunity here, but how does this hawkishness from the ECB flow across then to the way that we think about the Fed and the rate hike cycle there? How much are they going to front load those rate hikes? Certainly now, markets expecting 50 basis points in May and June. Some even suggesting you might get another one in July as well of 50 basis points or so. Okay, let's check in on the markets then. The FTSE 100 lower by 0.2%. The CAC 40 is higher by 0.2. We had that presidential debate, of course, and the polls suggesting that Macron came out ahead after almost 2.5 hours going head-to-head with Marine Le Pen. Before that election, that final vote, of course, on Sunday, April 24th. The Spanish IBEX gaining 0.1%. The FTSE over in Italy is lower by 27 basis points. Your range bound, essentially, on the benchmark. Earnings, we continue to assess those, and we'll pick out some of the individual members. Over in the US, of course, it was really Tesla that stole the limelight yesterday. It was very, very strong earnings. We'll break that story down for you. In terms of the future stateside, you're looking at gains of 0.4%. The US yields currently at 2.85. There was a bit of bid, as I suggested yesterday, for US Treasuries across the yield curve. Currently 2.85, up 2 basis points. Euro dollar in focus, of course, on the back of these more hawkish comments that we've had from members of the ECB, 108, and you're seeing gains of 0.4% for the single currency. And the German bonds in focus, the 2-year, you're seeing a move higher of 9 basis points, so a pronounced sell-off when it comes to the benchmark. The 2-year, the benchmark is the 10-year, but the German bonds, nonetheless, when you compare them to the Eurozone. Francine.
Yeah, let's dig into some of the sectors, of course, on the move, Tom, and it's very clear energy, construction, chemicals actually on the up. If you look at the, stock 600, we're seeing healthcare also being pushed up, but there's not that many, in the red. When they're in the red, they're down between 0.02%, so let's call it flat, Tom, just to make good use of the English language, and basic resources are the only ones on the way down. We don't know whether the fact that money markets are now pricing in a more aggressive ECB means that we'll see a bit more correction in some of these valuations. I'm thinking of tech stocks and things like that. But for the moment, that's the move we're looking at sector-wise.
Yeah, let's have a look at the individual corporates then and how inflation is affecting two different ends of the spectrum. So on the commodity side, you've got Anglo-American really being punished with a trading update, a production update, ranging down, or it's pulling down their guidance for production of the likes of coal and platinum and iron ore, and you're seeing them punished for that update, down 5.5%. The cost factor for Anglo-American is significant. They're raising costs by about 10%. Diesel is a significant concern for this company, prices there, but also labor costs as well. Well, the flip side, Nestle, they've been able to pass on a lot of those input costs around coffee and packaging and shipping to their consumers. Some of the fastest price rises we've seen, the most significant we've seen in years for this company. Executives saying they are prepared to continue to raise prices as well going forward to mitigate those input costs. But it was a beat for Nestle on the earnings front, up 1.5%. ABB, the big industrial giant, of course, a beat for them as well, even if cash flow came in below the expectations. A big producer of robotics, up 2.7%. Francine.
I'm paying so much more for my espressos and my cappuccinos, Tom, it doesn't even bear thinking about it. And it feels like it's only going to go up. Now let's get over to our Bloomberg MLive managing editor, Mark Cudmore. Mark, you're looking at U.S. stocks and their really earnings yield.
Yes, absolutely, Francine. We've been talking a lot about real yields in bonds this week. Well, this is the real earnings yield of the S&P 500, as calculated using the S&P 500 earnings yield minus the CPI print, headline CPI print. Now, the last 3 times this real earnings yield turned negative, it preceded a 20% drop in the S&P 500 in 1987, in 2000, and in 2008. Well, you know what? We've been deeply negative for some time now. And of course, stocks are holding up pretty well, which is a question that you guys ask me a lot. And it's a great question. And the reason is we've just got too much liquidity out there. It is the old Tina. There is no alternative. And there's just been abundant liquidity, exceptionally loose conditions, something we've not seen ever before in the history of monetary policy. But we do know that situation is changing. We know that financial conditions are starting to tighten aggressively. We know that yields around the world are starting to rise, most notably in Europe this morning. And that means at some point, this is going to matter and be bad for stocks later on this year.
Okay, MLive managing editor Mark Cudmore, thank you. Let's bring in Christine Aquino at this point. Christine, to what extent is this the ECB, what we're hearing from some of their members, just trying to play catch up and acknowledging that they've been behind the curve when it comes to inflation?
I think that's a great deal of it, Tom, because exactly this day last week, we were hearing from President Lagarde kind of being a bit more balanced with her comments at the last ECB policy decision, saying that they need to prioritize growth. And while inflation risks are in the offing, growth is also very, very important. And so initially back then, bond markets were actually very disappointed based on the reaction that we saw. But obviously in the past week or so, we've heard from several ECB policymakers, most notably ECB's Wunsch this morning, saying that indeed that rate hike story is really gaining traction for the ECB and money markets are responding accordingly.
So is that because they don't think there's a supply shock, or that the supply shock coming from what's happening in Ukraine will last longer? I mean, it's unclear to me why, suddenly it's kind of moved to hawkishness where the data hasn't really changed.
Yeah, I think, Fred, it's probably a bit of kind of markets waking up to the idea that the ECB can't go it alone in terms of kind of trying to maintain still that walking the line between hawkish and dovish, and especially because what we've seen from Fed pricing, BOE pricing as well, it was very, very similar. And so in some ways, I think markets in Europe, as far as ECB goes, are kind of catching up to that idea that just globally speaking, policy is really heading more towards the hawkish side of the spectrum. And also, I think, to be fair, markets were also kind of responding to a bunch of different inputs from various governing council members. Again, President Lagarde's comments last week were very, very measured. But since then, we've heard from other ECB policymakers that they're more emphatic on this idea that rate hikes are coming, and rate hikes are coming this year specifically. And we could get to that 0 level for the deposit rate as soon as December.
Yeah, the hawks now in the ECB Governing Council in the ascendancy, it seems, and the German 2-year currently up by 9 basis points, at positive at 13. When it comes to the earnings story, Tesla just smashing it with these earnings. It's a very different picture when it comes to technology in China. Part of that is a regulatory hurdle. Part of that is the lockdowns that we're seeing an impact on supply chains.
Absolutely, Tom. And I think this really is the next arena for this China versus U.S. divergence play that we've been talking about. And it's very, very notable. As you say, it's a tale of 2 EV makers. On the one hand, it's Tesla, of course, acknowledging the supply chain issues, but they sounded really optimistic that they're going to be able to overcome it. And then on the other hand, we have a couple of Chinese EV makers, again, citing the same factor of supply chain disruptions, but sounding very negative about it. And I think that tells you a lot when it comes to the sentiment on the ground in each of these countries. Of course, the U.S. still very much growing tremendously, and thus why we're seeing such a response from the Federal Reserve. But then in China, it's a completely different story. January, I think sentiment has really been bogged down by the fact that there are lockdowns, there are regulatory concerns, and all of these just coming together and really weighing on that sentiment in this sector.
Christine, thanks so much. Christine Aquino, there, our markets editor. Now joining us now is Beata Manthi, Citi's head of European equity strategy. Beata, thank you so much for joining us. Equities facing a lot of these headwinds coming from what we're seeing in bonds. What does it mean for stocks overall? Are we going to see a correction, and will the most of the correction happen in European equities?
Thanks for having me, Francine. So equity markets will be facing lots of headwinds, as you've mentioned, rising bond yields, downside risks to EPS. All this suggests to me that market will be facing a lot of volatility going forward. So to us, we have moved from buying the market at whatever cost last year to buying the dips right now and selling the rally. So it's more of a range trading market.
Beata, when you say you're buying the dip at this point, what exactly are you looking for?
So we have a framework called bear market checklist, and its intention is to distinguish between a correction that will turn into a bear market or a correction that is to be bought. So right now our bear market checklist is sending warning 7 out of 18 red flags. So to us, any correction you would have in the market, we would be buying into it. At the present levels, we have around 5% upside from the market where it's trading right now. So, it looks a bit more interesting. If you're buying the market right now, you'll get some returns. However, if you look at our target, if you bought the market at the start of the year, you would be flat on the year, right? So it's a much more difficult market to play.
So what are you expecting for earnings actually in the next couple of weeks? I think you had a 9% increase in terms of earnings per share. Is that now too optimistic?
So 9% EPS growth for this year are the estimates from the analyst consensus. I think they are far too optimistic. So our earnings revision index, so the direction of the analyst forecast, have already turned negative. So it's telling me that more analysts are downgrading their numbers than upgrading their numbers. The overall number has not moved yet because there are some big upgrades to specific stocks within the commodity space. So these upgrades are outweighing the downgrades elsewhere. But this is going to come to an end eventually. So my top-down EPS growth number for Europe is 3%, which is more in line with our current GDP forecast for the Eurozone, which is 2.4%.
Okay, but Beata, money markets now pricing in 3 25 basis point hikes from the ECB. Which sectors would be most vulnerable to that?
So, first of all, I don't think it's particularly negative for the equity markets, as you've discussed before, right? What I'm watching is the reaction of the the nominal bond yields, which direction they will go as the response to the hawkishness or hikes. So the direction south, so bond yields coming much lower, would be an indication of the policy mistake. This is how it has played out in the past. Now, because I am not expecting the current environment to lead us to a deep recession, I have a more balanced portfolio. So I'm selective within cyclicals. Within cyclicals, I continue to like basic resources within commodity space. I also like banks because I think they are pricing in almost recessionary environment right now. Within growthy cyclicals, I like tech, and within defensives, my favorite defensive sector is healthcare, because this is the least inflation sensitive sector out there within defensives.
Okay, Beata Manthi on some of the call. Citi's head of European equity strategy, staying with us, liking basic resources, banks and technology in this environment. Francine.
Now, coming up, a warning to the West. Russia test fires what it says a new intercontinental ballistic missile. I'll bring you the story next. We'll, of course, look at 2 months on from the war, what the next step could be. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
The latest on the war in Ukraine. Russia said it test-fired a new intercontinental ballistic missile, a move President Vladimir Putin said would give the U.S. and its allies something to think about. Well, joining us now is Bloomberg's Europe correspondent Maria Tadeo, who's in Brussels for us. So, Maria, what do we actually make of Russia testing this nuclear-capable missile at this moment in time?
Yes, Francine, and it's the Sarmat, or the Satan II, as it's also known. Russia yesterday made a very big deal out of this. This was all over national TV in Russia. Vladimir Putin himself, he was overseeing this test launch. And then, of course, he commented on it, saying, well, this will give those who want to threaten our motherland and the Russian Federation something to think about. So it is clearly a show of force. There's also an element here of morale. Remember, Francine, this is coming just a few days after the emblem of the Black Sea, the Moscow, was sank to the bottom of the sea. Whether it was an incident or a Ukrainian missile, it was a humiliating episode for the Russian Federation. So a lot of this is about boosting morale. But I would say one thing. There is a big difference between what the Russian Federation does, what the Russian Federation says it can do, and the reality on the ground. And what we've seen in Ukraine is that there are serious deficiencies in the Russian army. We've seen that in 58 days of war, they still haven't taken any major cities. We're waiting potentially for Mariupol to fall. But this has been a very complex, difficult operation for the Russian army. So yes, there is a show of force from Vladimir Putin and the Russian Federation. But if you look at the situation on the ground, not a lot is changing for the time being.
Yeah, we have the Russian news agency IFX reporting that the defense minister there has told Putin that the Russian army has captured Mariupol, of course, that crucial port in the Donbass region. We'll see if Ukraine confirms that. Meanwhile, Maria, Germany's finance minister Christian Lindner says the government is weighing sanctions on Russian energy.
We have to consider which sanction hurts and hits Putin's war chest, and which sanction in the short term hurts us more than him.
Maria, what does this tell us about how close Germany is getting to agreeing, or at least committing to, an embargo on oil and gas from Russia?
Well, and Tom, you saw it there in that clip. When he was speaking to Anne-Marie yesterday in D.C., he just put him, or would not put a date on this embargo. So is it going to happen overnight? We see that Germany at this stage does not want to do it. When you listen to Annalena Baerbock, the foreign minister, is a very different tune. She said by the end of the year, we want to halt all imports, and by the summer, we want to cut them significantly. But what you see in many ways is that this is a point of tension in the German coalition. At this point, there are growing discrepancies differences between the SPD and the Greens that are much more hawkish on this, but it's also the big question, which is how much is Germany willing to take a hit in terms of economic repercussions from this war, and is it willing to do it now? For the time being, well, the answer is not clear, and this is going to eventually at one point lead to boiling point in this coalition. As I said, it's very complicated for them to come with a solution right now, but the pressure is growing on Germany to take a much bigger and tougher stance.
Yeah, the complexities of unwinding themselves from Russian energy. Bloomberg's Maria Tadeo, thank you for getting us up to speed. Let's bring back Beata Mante, Citi's head of European equity. Beata, how much of this economic drag from the war is now priced into these markets?
I think a lot of it. So the market right now, to my models and estimates, is pricing in already flat to negative EPS growth in Europe. So a lot of bad news is in the price. Some particular parts of the markets, like financials or banks, are pricing in even much worse scenario. You know, when I look at the economic forecast of city economies, I can see that they've already halved their GDP growth for this year for the Eurozone. Of course, things can get worse, but for now, I think a lot is in the price.
Beata, if we go back to some of your calls, so healthcare is your preferred defensive sector. What part of the healthcare? Because we saw a lot of the biotech really being slammed.
Yeah, so I think the market we are facing right now is going to be very selective in terms of which parts of the market is going to buy. So it's not buying the entire sector the same. So healthcare is very similar to tech, right? You could see with the results in this season, you have losers, you have winners in terms of the announcement. So I think the market is going to be very, very selective and is going to increasingly focus on earnings delivery and sustainability of these earnings.
Beata, do you see much more upside for UK equities from here?
So UK equity is one of our favorite markets globally to play the current environment. Another one on the opposite spectrum is the US. So we have around 7% upside for the UK from the current levels. So decent, I would say.
Beata, if you were to take an optimistic view, I mean, what could go right? Because I see a lot of things that could get worse from here. But then, you know, if you think everything's been priced in, is there anything that you think will not be as deep or as, you know, difficult as economists are forecasting right now?
Sure. I think one of the most important indicators you should focus on is the releases of the inflation, right? So if it turns out the inflation actually is going to start turning faster and sooner than the economists are expecting it to be, perhaps we won't get as hawkish central banks as we are expecting them to be right now. So I think
Beata,
you know, lower inflation would be a very positive catalyst.
It would certainly be welcomed by many central banks right now. Beata, thank you so much, Beata Mante. Unless they raise rates and then have to, you know, cut them back down. Citi's head of European equity strategist, joining us with some of her main calls. I mean, it's not easy being a central bank any day, but at the moment, you don't want to do a mistake. And I was having a good conversation with, you know, a hedge fund manager and saying the problem is that they almost also want to be led by the markets because they're worried of surprising them.
Yeah, they're being led by the nose by the markets once again. That is a challenge as they walk this tightrope. Plenty more coming up. We're talking about Tesla. What amazing set of earnings from that company. Of course, we continue to keep an eye on what Elon Musk is saying about his bid for Twitter. Stay with us. This is Bloomberg.
Tesla's first quarter earnings beat estimates with a record profit due to strong demand for its electric vehicles. Now, the chief executive Elon Musk predicts that the car maker's output will grow for the rest of the year. Well, joining us now is Bloomberg's autos editor, or auto tsar, actually, Craig Trudell. I love saying that. Craig, if you look, first of all, at Tesla, good morning, first of all. I know all the 8-year-olds in London are all very excited about Teslas, and so there's still a buzz about it. The problem is deliveries and whether they can match that. And he was actually pretty confident that despite supply chain disruptions, he'll manage.
Yeah, the second quarter is going to be really difficult for them, and I think Musk was, really bullish about, being able to overcome that. I think our team in China has a great story about just how hard that's actually going to be. I think it's not just. I think it's because it's not just in Tesla's control, right? You have to give them a lot of credit for a really successful quarter and track record of many quarters going back a couple years now of operational excellence. But this is a situation where their supply chain in China is really going to be tested, right? They're going to try out this closed loop system, which is fascinating. Thousands of people sleeping overnight at the factory. But there are a lot of suppliers that they're going to have to rely on being able to get production of components back up quickly and be able to sort of keep that going in the face of the possibility of more shutdowns given China's stance.
Craig, we've been shortchanged on time, but just briefly on the credit front, because they just benefited this consistently. If you strip that out, does it leave a bit of weakness?
Maybe a little bit, but I think this is something that the industry for some time. Tesla's expectation is the industry is going to get its act together. They're still really cashing in on regulatory credits as the rest of the industry struggles to get EVs up and running.
Okay, Bloomberg's global car star Craig Trudell breaking out the earnings for Tesla, aiming for 1.5 million. The Musk star, all things Musk here on Bloomberg. Stay with us. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccines specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done, uses a small sample number. And most of the time, when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the Open, everyone. 30 minutes into the European trading day, and here are your top stories. Well, goodbye negative. ECB Governing Council member Pierre Wunsch says rates could turn positive this year. De Guindos says a July hike is also possible. Upping the stakes, Russia test fires a new intercontinental ballistic missile. Germany's finance minister tells Bloomberg they reject Putin's demand for gas payments in rubles. And full throttle, Elon Musk's Tesla beats estimates and forecasts bumper production growth. Their shares jump on late trading. Tom and I absolutely obsessed by what Elon Musk will do next. Maybe me more than Tom, but I'm like on Twitter watch. I mean, I don't know when he even has time to run a company because he's always on Twitter. Forget that. We're looking at the markets and then hawkish ECB.
How can we forget about that? He's he's on Twitter. He's trying to buy Twitter. He's got the Boring Company. He's got Tesla. He's got the SpaceX.
If he tweeted about ECB as well.
Well, let's get him on that, shall we? Let's shift him over to that position because that is what's happening. The markets are repricing around a more hawkish ECB. The markets now, money markets pricing in 0.75% hikes this year, 25 basis point hikes, 3 of them in 2022. So that adjustment is being felt, and you've had that more hawkish commentary coming through from a number of officials within the European Central Bank, again, focusing on inflation within the context of that war that continues in Ukraine. You're seeing gains of just under 0.1% across the benchmark and some divergence amongst these indexes, and I'll get to why that's happening shortly. The DAX is up 0.4%. The FTSE 100, though, lower by 0.1%, and is the mining component, basic resources, that is proving a drag for the FTSE 100. Let's switch it over and have a look at how things are playing out. There was no love as well, by the way, from President Xi Jinping over at the Boao Forum for these markets and for the economy. He just came out and re-stressed his determination to tackle COVID with COVID zero, but no sweeteners when it comes to the markets in China. You saw dramatic falls on the mainland. Whether or not the national team steps in there is something to be watching for. Energy is gaining, but basic resources as well. But in fact, you've got Anglo-American. This is not an intraday chart that we're seeing here. Is Anglo-American is part of the mix because they came out with a production update, particularly around iron ore, coal and platinum, reducing their forecast, but also upping the cost and the cost of production by about 10%. So that is a factor as well. You had earnings from Nestle. That was a strong beat. They've been able to comfortably price in and increase these prices for consumers and suggesting that that will continue as those input costs continue. So that's the shape of play about 30 minutes into the trading session as we continue to adjust to this ECB and the more hawkish sentiment there within the money markets. Francine.
Yeah, Tom, let's also get the latest on the France presidential debate last night. Emmanuel Macron attacked his far-right or nationalist challenger, Marine Le Pen, over her links to Moscow. He claimed that by taking out a loan from a Russian bank, she had made herself dependent on Russian power.
Why did you do it? And I say this with great gravity tonight, because for our country, this is bad news. Because you depend on the Russian power and you depend on Mr. Putin.
Meanwhile, Marine Le Pen emphasized the cost of living crisis being felt across France.
I truly want to make purchasing power the priority of my next 5-year term if the French have confidence in me.
Well, joining us now is Bloomberg's Caroline Conan. Caroline, we watched it in the Lacroix household, and I have to say we were split 50-50. Those who thought Marine Le Pen had won it, those that say Mr. Macron have it. The polls have not shifted that much, so who performed better in the debate?
There was one poll that came out after the debate about how convincing the two were during this 2.5 hour of primetime television, and it said that 59% of the French who watched the debate thought Emmanuel Macron was the most convincing. However, she was considered more tuned with the daily issues of the French, and also she was actually considered more roaring with her proposals, especially on Europe or immigration or banning the headscarf in public spaces, which Macron said would provoke a civil war. So a lot of punchlines on both sides. Clearly, Marine Le Pen was more prepared, more composed, more comfortable than last time in 2017 when she had a very bad time during that last face-off with Emmanuel Macron. And we'll see over the next few days whether this actually plays in the polls over the next couple of days.
Yeah, and Caroline, this is really what struck me, Tom, is that it felt like a new Marine Le Pen because she was prepared, she was cool, she was smiling a lot more than in 2017, and so obviously it feels like she had spent the last 5 years for this very moment, and so within the margin of error, I don't know whether it tilts in her favor.
Yeah, and the fact that she obviously learned those lessons from that disastrous performance in 2017, and the challenge, of course, for Macron was having to defend his record, as Caroline was saying. Caroline, how significant are these debates, though, actually? Do they really move the needle when it comes to the French vote?
It is possible, especially for the left-wing voters and the far left-wing voters of Jean-Luc Mélenchon, who came third in the first round a couple of weeks ago and had almost 8 million votes across the country. In fact, if you look at this same poll from last night after the debate, about 60% of Mélenchon's electorate thought that Macron was more convincing. But Jean-Luc Mélenchon actually tweeted after the debate saying, "Such a waste, the French deserved better."
All right, Caroline, thanks so much, Caroline Cunol. It's a beautiful Eiffel Tower. Look at that. Everyone's getting ready to vote on Sunday. Well, we hope, because there's a lot of people that think they're not going to vote. But Paris is always a good idea, especially in the springtime.
I hear someone's heading to Paris, surely.
Who?
Teeing it up. There's
so
no
ready.
envy. There's no envy here.
And Sunday evening, we have a 2-hour special bringing you all the live results.
And everyone should tune in for that. This very consequential vote, of course, that's happening in France. Okay, coming up from France, and of course the focus there on Russia, to what's happening in China. The AmCham president of China, Michael Hart, on China's COVID-0 policy, what it means for US businesses operating on the ground in that country. Stay with us. This is Bloomberg.
About what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open, everyone. 39 minutes into the European trading day, and you can see a bit of change because there's growing optimism for another strong earnings season, which is why we're seeing U.S. stocks actually gaining, a sell-off in treasuries resuming. But then here in Europe, a lot of the tilt forward is for a very hawkish ECB. We also heard from Mr. de Guindos, and that is moving some of the bond yields. You can see the 10-year German bond at 0.9 with the Italian 10-year yield at 2.55.
Okay, let's refocus on what's happening in China. A major story, of course, the disruption caused by Beijing's commitment to its zero-COVID policy. Nomura cutting its four-year growth forecast for China to 3.9%. Unthinkable a number of years ago, from 4.3%. If realized, one of its worst outcomes in decades. But President Xi Jinping has defended his country's lockdown-dependent approach and urged greater global cooperation in fighting the pandemic.
We need to work together to defend people's lives and health. Safety and health are the prerequisite for human development and progress.
Okay, we are joined now by American Chamber of Commerce in China, President Michael Hart. Michael, thank you for joining us. So reiterating there, the Chinese president, this COVID zero policy, and we've heard this a number of times now from Xi Jinping and his senior team. They are not walking away from this policy. So what are the implications for US businesses operating on the ground in a situation where you have 300 million plus people under some form of lockdown?
Right, so thanks, Tom. Good to join you. Sort of the American business community is telling us sort of two major things. Number one, they want to have more access to travel to and from China, and that hasn't changed with this Shanghai situation. And number two, Shanghai specifically is causing supply chain issues all across China. Implications for the China businesses, implications for global business.
Just illustrate and unpack for us the extent of those disruptions for US businesses and what they are able to do to mitigate some of those challenges. Just how severe is it now?
Right, so I talked to one CEO this morning who said that they're doing food production in Shanghai, and that facility actually is distributed across China. And so because they haven't been able to operate at full capacity for nearly a month now, they're starting to run out of products across China. So that's food distribution for this American company across China. Another company gave us an example. They are in northern China, but they distribute to the rest of the world with their manufacturing products. And their supplier is in Shanghai. So in this case, because the supplier in Shanghai is completely shut down, they can't send product components to this northern China factory. And that means this company then cannot distribute their product to the rest of the world. So these lockdowns in Shanghai, supply chain disruptions, really impacting, again, sort of American business within China. And then for the global supply chain also has major implications.
Michael, if we're starting to think about a COVID zero policy that persists throughout this year, and that seems to be forming as something of a consensus, what will it mean for the appetite of US businesses to continue to invest in the Chinese market?
Right, so we did a couple of surveys. We did the survey at the end of last year before Shanghai got hit with COVID. And then we did a survey at the end of March. And so already between those two surveys, we could see before COVID hit, companies were already telling us if China continued its strict travel policy, people would start to invest less. People would stop sending executives just because it's hard to get people here. At the end of March, it was more extreme view. Companies had already said that their sales this year would be impacted. And a number of companies were already saying they were going to reduce their investment or hold off on their investment in China. So this current Shanghai situation is a big impact, but just the overall travel restrictions, which we've seen for the last 2 years, major impediments to additional foreign investment in China.
Major impediments. I just think it's worth reiterating for our audience as well, who may not be up to speed on what's going on, that if you need and if you want to get talent into China, there's at least a two-week quarantine process, and that's if you actually get a visa. So that challenge around talent, just how acute is that now? What are businesses telling you?
Right, so well, the bad news is, Tom, it's worse than you think. In fact, now it's 3 weeks quarantine in Shanghai. And we had some executives who left Shanghai, came to Beijing, and they were asked to quarantine for another 2 weeks. So that's a total of sort of 5 weeks potentially of quarantine between home and when you get to your desk in Beijing. So that's a major issue. I mean, you hit the nail on the head. Last year, at the end of the year, our survey, something like 70% of companies said they're having a harder time getting executives who would be willing to come to China. And that's if you can, because in terms of the travel restrictions, one, can you get a visa? That's a question. Number two, can you find a flight, and is it a reasonable cost? And a bigger implication is a number of family members are having a hard time getting visa to come. So all of a sudden, China is a very difficult place to place expatriate talent.
Michael, we know the US, the European Union as well, to some extent, are pressuring China to align with the sanctions on Russia. There is a debate as to what extent Chinese companies, possibly US companies as well, operating in China may be exposed if sanctions are put in place, depending on how China responds to what is going on regarding the conflict in Ukraine. To what extent is that a conversation that's taking place amongst and within the boardrooms of your partners and your members? How much of a risk is that?
Right, so one of the things that AmCham has done is collect concerns from our members and try to educate them. So we've been having a number of seminars and discussions with legal experts and others to try to understand what those potential sanctions might mean for American businesses. It is a concern. A number of American businesses in China export a significant amount of their product produced in China to Russia. Some of them also sell goods and services, but the truth is we don't know what the impacts would be, but our companies are concerned about potential sanctions.
And on the economy, and we were leading into this conversation with Nomura's call that you may see GDP growth below 4% this year for China, which again, within the historical context, is and would be remarkable if that comes to the fore. Are your members starting to feel that slowdown now, particularly from the consumer?
Absolutely. I mean, one of the things that came out of the survey at the end of 2021 was people felt 2021, the economy had bounced back. Now, it still was only the level it was in 2019, but we had made some progress. January and February, the revenues looked pretty good, but all of a sudden, because of COVID in Shanghai in March, companies have already said that their revenues will be impacted this year. Absolutely.
Okay, when it comes to the regulatory front, there's been a lot of scrutiny, of course, on what's happening when it comes to technology, the real estate sector in China. Are your members largely immune to that? Is it largely a domestic focus on the Alibabas, the Tencents of the world and the big real estate developers? Or is there an overflow to some of your members as well as a result of that regulatory squeeze?
Yeah, so those two areas you talk about specifically have not been a major topic of conversation, but anything that impacts the Chinese economy in general certainly impacts our members. So I think our members certainly are attuned to, just the economy in general.
Okay, Michael, just before we let you go, just a broad question on generally the sentiment. And I know you've been gauging this with your surveys, but when you weigh up what is happening in China, whether it's COVID-0, the regulatory front, the slowdown in the economy, the geopolitics, to what extent is China becoming less appetizing as an investment destination? I know you talked about it in terms of FDI, but how serious is this conversation now amongst your members about whether they really want to be committed in the long term to this economy?
Right, it's a good question, Tom. I mean, our members are here, have been here for a long time, are very committed to China. It's one of the reasons why when we had a meeting last Monday with the Minister for MOFCOM, that we went in and raised the concerns that American companies have and other chambers of commerce did the same. But we certainly want to continue to be operating in China. But if the investment environment is difficult, if travel to China is difficult, it's our job to let the government know that it makes China a less attractive investment destination.
Okay, American Chamber of Commerce in China, President Michael Hart, thank you very much for joining us out of Beijing for that assessment on how US companies are weighing the impacts of COVID-0, the implications, of course, of the regulatory front in China and a slowing economy. Thank you for joining us. I mean, I've been banging on about this GDP forecast from Nomura, below 4%. The context is remarkable, though. There used to be the consensus, though, anything below 7% in China was just not acceptable for the Communist Party because of the risks around social stability. And now you've got someone like Nomura coming out saying you could be below 4%. It's remarkable.
4%, I know, 4% for such, and actually an economy where you see quite a lot of inequality as well, right? I mean, we talk about China as a whole, but it's a difference between who lives in the city and then rural China.
Absolutely.
So we'll talk a lot more about China. Also coming up in the next hour, we speak to the Moderna chairman and co-founder, Noubar Afeyan. That's a conversation on COVID, on vaccinations, but also on biotech in general. That's at 9:30 a.m. London time. It's an exclusive, and this is Bloomberg.
at the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
We are standing ready for further sanctions on Russia. We strongly support all sanctions which isolate Russia politically and economically. Well, we have to consider which sanction hurts and hits Putin's war chest, and which sanction in the short term hurts us more than him. And all sanctions which now and for the foreseeable future hurt him more than us as international community, we are in full support of. And when it comes to coal, to oil, to commodities, raw materials, and natural gas, you have to differentiate the timetable and the schedule. I think coal and oil is faster possible than, for example, natural gas.
I spoke to a European official 20 minutes ago, and they said Germany is still the holdout on oil. Is there an openness to potentially work around direct sanctions of oil, maybe freezing the funds or putting to an escrow account?
Well, there are talks in the European Union. We are preparing the sixth sanction package on financial measures, on oil. So we are in an open debate. For us, it's crucial to hurt Putin's war chest more than we affect our own people and economies.
So you are open to oil being included?
Well, it depends on the timetable and the question, how can we reduce our dependency on Russian oil imports? The faster, the better.
Germany's Finance Minister Christian Lindner speaking to Bloomberg's Anne-Marie Orden. Let's get the first word news now with Laura Wright. Laura.
Thanks, Tom. A group of 7 finance ministers and central bankers have condemned what they call Russia's unjustifiable war in Ukraine. They say they will work to isolate Russia from the global economy. The G7 also told international organizations they should not conduct activities with Russia in the usual way. Russia says it test-fired a new intercontinental ballistic missile. Putin says the weapons will defend the country against outside threats. The Pentagon says Russia followed normal notification procedures before the launch. The U.S. Justice Department will appeal a federal judge's ruling that threw out a mask requirement for public transportation. That sets up a legal fight that could last beyond the midterm elections. Many airlines have now dropped their own mask rules, but some transit operators have left the requirement in place. The European Central Bank could lift policy rates above zero before the end of the year. That's according to one governing council member, who told Bloomberg the war in Ukraine probably won't keep the ECB from raising borrowing costs to react to unexpectedly strong inflation readings. The member said they are ready to consider a rate hike in July. Wimbledon has barred Russian and Belarusian competitors from this year's tennis tournament in response to the war in Ukraine. Event organizers say they had a responsibility to limit Russia's global influence. The ATP, which governs men's professional tennis, took issue with the decision, calling it unfair and arguing Wimbledon had agreed entries should be based solely on rankings. Billionaire investor Bill Ackman lost more than $430 million on a 3-month Netflix bet. Ackman's Pershing Square Capital Management sold its Netflix holdings after the streaming pioneer reported an unexpected drop in customers. Shares plunged 35% on Wednesday. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Laura writes in London. Now, a lot to talk about with Netflix. I mean, what a story. I think it's the stock that has lost the most since the beginning of the year, almost in one go, down 35%.
Yeah, it's back. The stock value now is back to kind of 2018, early 2018 levels. And Bill Ackman, he was piling in January because he said this is a valuation. This
Not
is
a good idea.
This is an opportunity. He wrote a letter, and then his latest letter saying, look, I learned my mistakes. I'm going to cut these positions, long positions, of course, on Netflix, and just take the loss on the chin, $430 million.
Yeah, not something to be snubbed at. I mean, we were talking with Henry Detroit yesterday at 91. He says, look, it's a great business model. The problem is just the valuation. It's not that it'll go away.
Okay.
It's that when you overprice it at this much and there's, something going on with interest rates and actual subscribers, then you have to readjust.
So will ads and changing the model really revive the business? But valuation clearly taking a hit for now. That is it for the European Market Open. Surveillance Early Edition is up next. Stay with us. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I see an expeditious march to neutral by the end of the year.
We have to consider which sanction hurts and hits Putin's war chest.
Cold War mentality would only wreck the global peace framework.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Here's what's coming up on today's program. The ECB's hawkishness goes mainstream. The central bank's vice president, de Guindos, is the latest that suggests that a rate hike before July is possible. Xi Jinping defends his COVID-0 strategy. The Chinese president also takes veiled shots at the U.S. sanctions campaign against Russia. And say, with Bloomberg Surveillance Early Edition, this hour we speak to the co-founder of Moderna, Noubar Afeyan. You can send in your questions on IB plus TV Go. Now, first thing is first, so let's check in on the markets. And if you look at U.S. indice futures, you can see they're actually seeing a lift. It's a different story than it was yesterday. NASDAQ futures gaining some 1%. There's a bit more optimism for another strong earnings season report, while a sell-off in treasuries resumed with the debate raging on, of course, about whether inflation is peaking or not. That inflation debate also filtering through to Europe. We not only had Pierre Wunsch say that he could see interest rates at the ECB in positive territory by the end of the year, but we heard de Guindos. So there does seem to be a general hawkishness filtering through a lot of the ECB Governing Council member. We hear later today from Jay Powell and Christine Lagarde. You can see European stocks actually gaining some 0.4%. A lot of the movement that's going on today is on the FX space. Euro dollar 109.24. And as the ECB gets more hawkish, of course, watch out for some of those German bonds. If we look at the individual countries, the FTSE is pretty much flat. The DAX gaining some 1%. It was one of the biggest losers yesterday. The CAC 40 gaining some 1.4%. Now, what I'm surprised on the CAC 40 is that we have a big election on Sunday. We had a debate yesterday between Marine Le Pen and Emmanuel Macron. Not much in terms of movement for the polls, but actually it's a very tight race, and it's certainly not being priced in when we also talk about nationalization. If Marine Le Pen of certain companies, of course, if she were to become president, it's not really priced in when it comes to a lot of these equity stocks. Now, hawkishness going mainstream. The ECB's de Guindos has become the fourth and latest official to signal an end to QE. Traders are now betting on 3/4 point hikes from the ECB this year, after Pierre Wunsch also echoed hawkish sentiments in a Bloomberg scoop.
We're going to stop EPP, and I think we are going to hike. For me, unless there would be a big shock in the economy that we've not foreseen. And of course, the uncertainty is big with the war in Ukraine. But I believe without any really bad news coming from that front, hiking by the end of this year to zero or like slightly positive territory for me would be a no-brainer.
So let's get into the key market drivers with our markets editor, Christina Kino. Christine, ECB, quite a lot going on with money markets now pricing 3 ECB quarter-point rate hikes in 2022. I mean, the market's really shifted on that one pretty quickly.
Absolutely, Francine. It really took just the past week when they were initially disappointed by President Lagarde's remarks last week at the policy decision, because she was very, very measured. But then over the course of that week, we really saw more of this hawkishness coming out from other governing council members, and markets finally getting on board with this idea that ECB is going to hike, and the ECB is going to hike multiple times this year to finally exit that zero rate level that they've been in since forever.
I mean, forever. It feels like forever.
It does feel like
forever. There are people on
forever,
trading floors that have never seen inflation. I'm a little bit older, so I have. All right, Treasury bulls versus bears. Where are we?
Well, Francine, it's still very early days, but we are seeing those calls now coming through, calling the top on these Treasury yields. I think that was really prompted by what we saw with the positive real yields. I mean, of course, they were only temporarily positive, and we haven't gotten an extension there. But I guess it was a momentous occasion in some respect, because this idea that bonds will finally offer something to compensate investors for inflation was attractive enough for some. But, yields are up again today, of course, because it's still constantly a battle between how fast the Federal Reserve is going to hike versus the sort of Fed fatigue that markets have been experiencing of late, and whether we really kind of hit that diminishing returns when it comes to Fed speakers impacting yields. I think it's really going to come down to May when the Fed is going to have to do something or deal with the consequences of that.
I mean, I have a million questions. First, there's no alternative. At some point, there's going to be an alternative, so I don't know what that means for yield. So we continue looking at treasuries pre-market. I think we have a couple of figures or numbers that we need to look at. We're looking at Tesla pre-market. In general, when you look at NASDAQ futures, they're gaining 1%. I mean, we also need to talk about China and this U.S. divergence. It feels like it's a story of divergence, full stop.
Absolutely, Francine, and in a number of different ways. And today, the way that that's playing out is very much in the tech sector because, if you contrast the results of Tesla, fantastic results, of course, and a lot of optimism that they're going to be able to overcome those supply chain disruptions. And then when you look at EV makers in China, same thing, though. It's supply chain disruptions, largely the story there, but the sentiment is really, really negative. I think that's basically a result of what we're seeing more broadly in China, of course, going towards deceleration in the economy and, of course, the impact of those lockdowns really taking a toll.
Christine, thank you so much. Christine Aquino, there are markets editor. So let's do those. I think we have the pre-market boards. We look at Tesla. We had a great roundup of also Craig Trudell telling us exactly what Elon Musk's next move could be. The fact that it is actually not as easy as Musk puts it out there because of the factory in China, the fact that supply chains will still be hit. But pre-market, Tesla gaining some 7.3%. Now joining us to talk about the markets, to talk about real yields and the impact overall in stocks, Christian Muller-Gleesman, Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs International. Christian, as always, thank you so much for joining us. I mean, the million-dollar question, how much of a rotation will this continue? What does this mean for stocks? Are you expecting a correction?
Yeah, I mean, listen, it's the big question we're having. I think we had a lot of investors buying equities to get exposure to real assets, to get kind of, as you were saying, there is no alternative getting yield, a real yield in a world of negative real yields. And now we start to see the real yield being more positive. So the question obviously pops up, do you still need these type of elevated equity exposures, these type of real asset exposures? But I think what's worth keeping in mind is that the yield differential is still very much in favor of equities, of course. I mean, we're talking about like 1.6% dividend yield on the S&P, earnings yields obviously much higher, and 3% in Europe. So I think that the yield cushion is probably still in favor of equities, but the most important thing is that equities can give you a kind of claim on nominal growth. So with that in mind, equities still have that inflation hedging capability, which bonds don't have. And that means that the equity risk premium could actually be much lower in the coming years compared to the last cycle, where you had deflation. And that's why it's so difficult right now to say that this higher real yield is already likely to trigger significant rotation back to bonds. I think that's a bit too early. Tactically, however, a lot of discussion about recession risk, and if you could at least
I was going to ask you.
Correction.
Yeah, I was going to ask you, Christian. So first of all, how do you look at this market implied probability of a recession, and the probability, in my eyes, of a policy mistake from central banks right now seems quite high.
Yeah, I mean, this is the key debate now. Are you going to get, tactically a very difficult setup for a longer-term playbook, which is still supportive for equity? And I think we've looked at this a bit. So recession probability modeling is very difficult, as we all know. We looked at a few leading variables, a few kind of coincident variables. The short story is, coincident variables, which are mostly risky assets, they are not telling you that there's a lot of recession risk being priced right now. If you look at some of the more famous leading ones, like the yield curve or like cyclicals versus defensives valuations, they are starting to flash a bit of a signal. So the probability they're giving us for the next 12 months that you get a recession is probably around 30 to 40%. But the important thing is that we found in asset allocation, these levels you're currently getting are not consistent enough. So a lot of indicators are actually telling you not that high risk yet. And you have to be careful to be too early in terms of adjusting portfolios.
So you remain overweight equities at the moment in your asset allocation. What would make you change that?
Yeah, listen, I mean, on aggregate, our recession probability, including all the indicators, is currently around 20-25%. At 40%, that is usually when you want to really think about downgrading risk in a more forceful way. That's when the left tail risk, the big correction risk, as you were asking, that's when that picks up. So we're not quite there yet, but that can go quickly. So I think if we do see in particular breadth in the indicators emerging, So it's not just the yield curve, it's not just the cyclical thrust defenses, but you start to see credit spreads react. If you start to see kind of, for example, the Fed Fund futures pricing with regards to pricing the first cut in the next 12 months, that actually is a very reliable signal in the past. Currently, that curve is pricing the first cut probably in 18 to 20 months. So you're still not quite there where we would say it's really a clear signal with regards to recession risk. But there are other reasons why equities could have a choppy time, no? Just Q2 being very disappointing with regards to growth could mean that equities are a bit fat and flat, irrespective of recession risk.
And Christian, I want to talk a little bit about earnings per share and, of course, these cyclical versus defensive valuations. Valuation is definitely the key in all of this. Christian Müller-Gleesman, their managing director for portfolio strategy at Asset Allocation at Goldman Sachs, stays with us. We'll be back with him in just a couple of minutes. Now, coming up later on in the program, we also speak exclusively to the co-founder of Moderna. He's Nubar Afayan. You can send in your questions on IB Plus TV Go. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Stance that does not stimulate the economy that has clearly demonstrated it can self-sustain is a top priority. And this is where the question of timing comes in. How quickly should we get there? So accounting for the risks of being too fast or too slow, I see an expeditious march to neutral by the end of the year as the prudent path.
Well, that was the San Francisco president, Mary Daly, saying that the U.S. central bank should move purposefully and raise interest rates to neutral by year-end. Now, still with us, Christian Müller-Gleesman, managing director for portfolio strategy and asset allocation at Goldman Sachs. I think I invented a new title for you, managing portfolio, Christian. When you look at the cyclical versus defensive valuation, I mean, this is probably one of the most interesting things in the market. Like, how will those shift, and what do they tell us about the broader assets?
Yeah, I mean, I mentioned it earlier. So if you look at that seems to be the most bearish indicator right now, even more bearish with regards to the yield curve in terms of what we can expect for growth and recession risk. But to some extent, it might also be a bit distorted because in particular, the defensive part of that has been incredibly resilient in the face of rising real rates. And you could actually see that indicator kind of see some relief just by virtue of defensive parts of the market catching up a bit with real yields. We've seen that across the board. Gold has held up much better than real yields. Defensive sectors within equities have held up much better than real yields. It just seems that markets have an inherent bearishness on growth right now already embedded, which is maybe a bit too early. As I said earlier, I think we can talk about recession risk, and I think that's certainly a topic for next year in terms of the occurrence and for something the market might have to price in the second half.
Is it because market are basically looking at central banks and saying at some point they'll have to choose, and we see this with the Fed, they'll have to choose, whether to deal with inflation or sustain employment, and basically it's these opposing forces that the markets struggle to make way with.
No, I totally agree. I think there is this perception in the market that the Fed has to engineer a financial conditions tightening to kind of get in control of inflation, and that financial conditions tightening will mean a severe growth slowdown, which is very difficult to control, to engineer a soft landing, and that's why there's this inherent defensiveness in the market. But that also creates a low hurdle rate in the near term to surprise to the upside. Because this process of the Fed slowing down the economy is taking time. So if you look at the earnings season so far, you actually see a lot of the cyclicals, they've surprised to the upside, and stocks have rallied with relatively small surprises. So it tells us in the near term, maybe the market is a bit too bullish on defensives and possibly some of the secular growth names as well. We've seen that with some of the secular growth names missing results, being punished heavily, but they're maybe a bit too bearish on the cyclical names.
Christian, what are you expecting this earnings season? So I don't know whether earnings per share forecast overall for the year are too optimistic, or they can still, if you focus on margins, some of the other things, it'll be okay this time.
It's a really good question. I think at the margin, we've been downgrading our earnings growth forecasts quite a bit in function of the Russia-Ukraine crisis, cost input pressures, of course, and eventually there's going to be much more focus on pricing power. And I think our equity strategy teams, they've been very focused on capturing that more on a sector and on a thematic level. For the index level, what does it mean? I think we're looking at mid-single-digit earnings growth in most markets with a bit of downside, but not that much downside based on what we know right now. I mean, obviously recession would change things around, but with what we know right now, there's some offsets because you have commodity earnings being boosted, of course. You have like financials earnings having done reasonably well. So net, I think mid-single-digit is a decent base case, but it will be really interesting because the higher real yields go, the more earnings growth you need to sustain an equity overweight. So I think it would be interesting. The more earnings growth comes under pressure, it also puts a bit of a question mark with regards to being too bullish equities.
Christian, we're running out of time. I want to ask you about Japan, but I also want to ask you about China. And China is probably the most important. What are markets misunderstanding about China right now? How impacted will growth be?
Listen, we have a major lockdown still going on, and our economists have highlighted that based on their effective lockdown index, China is now by far seeing the biggest drag on growth, as you can imagine. We see it in the commodity demand. We see it starting to enter a bit the policy easing side via the currency. So I think the Chinese currency has been a bit weaker recently, and I think that's been a key discussion point in the last few days with clients of ours, where we're just wondering if this is the beginning of a bit more of a deflationary shock here, where China starts to devalue the currency, and that could actually provide a bit of relief on inflation in the first instance, but longer term maybe create concerns again with regards to China deval risk. But outside of that, I think, no, we're just dealing with a growth drag here, which is lingering, and I think that will affect certain parts exposed to that.
Christian, thanks so much, as always. Christian Müller-Gleesman there. He's Managing Director for Portfolio Strategy and Asset Allocation at Goldman Sachs. Now, coming up, the path ahead for sanctions on Russia. Our interview with Germany's Finance Minister, Christian Lindner, is next. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
This is a market that, over the past few weeks, has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We are standing ready for further sanctions on Russia. We strongly support all sanctions which isolate Russia politically and economically. Well, we have to consider which sanction hurts and hits Putin's war chest and which sanction in the short term hurts us more than him. And all sanctions which now and for the foreseeable future hurt him more than us as international community, we are in full support of. And when it comes to coal, to oil, to commodities, raw materials, and natural gas, you have to differentiate the timetable and the schedule. I think coal and oil is faster possible than, for example, natural gas.
I spoke to a European official 20 minutes ago, and they said Germany is still the holdout on oil. Is there an openness to potentially work around direct sanctions of oil, maybe freezing the funds or putting to an escrow account?
Well, there are talks in the European Union. We are preparing the sixth sanction package on financial measures on oil. So we are in an open debate. For us, it's crucial to hurt Putin's war chest more than we affect our own people and economies.
So you are open to oil being included?
Well, it depends on the timetable and the question, how can we reduce our dependency on Russian oil imports? The faster, the better.
That was Germany's Finance Minister Christian Lindner speaking to our Anne-Marie Hordurin about the path ahead for sanctions on Russia. Now let's get straight to the Bloomberg First Word News. Here is Leanne Gerrans. Hi, Leanne.
Hi, Francine. Billionaire investor Bill Ackman has lost more than $430 million on a 3-month bet on Netflix. Ackman's Pershing Square Capital Management sold its Netflix holdings after the streaming pioneer reported an unexpected drop in customers. Shares plunged 35% on Wednesday. Now, Wimbledon has barred Russian and Belarusian competitors from this year's tennis tournament in a response to the war in Ukraine. Event organizers say they had a responsibility to limit Russia's global influence. The ATP, which governs men's professional tennis, took issue with the decision, calling it unfair and arguing Wimbledon had agreed entry should be based solely on rankings. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thanks so much. Coming up, co-founder of biotech company Moderna, Dr. Noubar Afeyan. That exclusive interview up next. You can send in your questions, and this is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
The ECB's hawkishness goes mainstream. The central bank's vice president, de Guindos, is the latest to suggest that a rate hike before July is possible. Xi Jinping defends his COVID-0 strategy. The Chinese president also takes veiled shots at the U.S. sanctions campaign against Russia. And stay with Bloomberg Surveillance Early Edition. Up next, we speak to the co-founder of Moderna, Noubar Afeyan. You can send in your questions on IB plus TV Go. So good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. First thing is first, as always, 9:30 UK time, so we check the markets. Today, the market's actually getting a bit of a lift. There is more and more optimism for another strong earnings season's quarter. We saw also a sell-off in treasuries, resuming with the debate raging about whether inflation is peaking. Now, I would suggest everything that will move the markets will be inflation-related. A little bit later, we hear from Christine Lagarde of the ECB. We'll also hear from Jay Powell of the Fed. They're both at the IMF in Washington, but there does seem to be a general sense of hawkishness. We heard it from the Vice President, we heard it from the Belgian Central Bank Governor, who's also on the Governing Council. And if we do go into positive territory by the end of the year, that will move, of course, a lot of the bond yields, and in turn could move stocks. You can see the German 2-year yield 0.157. Now, Noubar Afeyan is best known for co-founding the U.S. biotechnology company Moderna, which developed one of the mRNA COVID vaccines. He also co-founded Omega Therapeutics and Celerity. He's a visiting lecturer at Harvard Business School and still finds time to sit on the boards of the MIT Corporation and the Boston Symphony Orchestra. Well, Dr. Noubar Afeyan, thank you so much for joining us. We're going to have a good conversation on COVID vaccinations, but actually Flagship in general. So thank you for, first of all, coming to London and in the studio. When you look at Flagship and what you're trying to do at the moment, what's the next phase? So you deliver this mRNA. It's been 2 years of COVID. What are you focusing your attention on next?
Well, Francine, first, it's great to be here, also in person in the studio. Flagship is a company that is building many, many platform companies in the biotechnology industry. And so there's a lot of exciting new developments coming out of our newfound understandings of disease. We are creating new combination platforms between computation and new types of drugs, new types of diagnostics. So there's a whole range of very exciting things going on. If anything, innovation is accelerating. We're making very big leaps. So that work continues to go on.
Innovation thanks almost to mRNA, or is it innovation that would have happened anyway that maybe was delayed because of COVID?
Well, what the mRNA platform did is to show the world the power of platforms. It really has not been the case in biotechnology that there is such a thing as a platform. That is a common tool that can be used for many, many different programs. That is both enabling new programs, but also serving as an example for other platforms that we're developing that we expect will have a similar effect. One set of investments coming up with dozens of new products.
How has, and I know I've asked you a number of times during the COVID pandemic, and I wonder whether it's changed. How has our relationship, but also the government's relationship with healthcare changed? On the positive, I guess we're much more aware of it. On the negatives, you have many more people that are anti-vaxxers.
Well, yeah, that's those are the two extremes of what governments are responsible for, is to really provide for a level of health security, which we recognized 2 years ago, and what we've gone through the last 2 years was relatively a low level of health security that we were afforded. And I hope that this pandemic will cause us to elevate our level of health security, particularly in advance of another threat. But on the other hand, as you said, it's been highly politicized, and as a result, people feel like it's some political expression as to whether they want to wear a mask or not, take a vaccine or not. And of course, if you lived on your own, that's a really good individual choice. But if you live within a community, within a society, then your ability to infect and impact the health of others is quite dramatic, as we've seen. And you're right. Not only do we have to think about the present, but also in the near future, when the long effects of COVID, afflicting millions of people, is going to add to our healthcare burden.
How has COVID changed you as a chief executive and founder?
Well, it's tested us. It has shown us the possibility of what people can do, what groups of dedicated people can do in terms of coming up with scientific solutions to global problems. It's also caused us to see the best in government-private sector partnerships. One wonders why in peacetime, from a health standpoint, we can't do the same kind of partnerships to advance treatments the way we were able to in the last 2 years. So it's given us lots of optimism.
Why can we not? Is it funding? Is it focus? Because people are focusing on other things. And if you're a government and you're dealing with inflation, you say, well, why do I spend money in healthcare where actually I need to fight these fires first?
Well, we're spending more and more money on healthcare inevitably, and so I think whether we like it or not, that cost is going up. So we either deal with it and try to address ways to take it down, or we ignore it and it's going to keep going up. I think the bigger issue of why not, as you said, is there's a level of distraction, but also there's this notion that in health we have to avoid doing anything that in any way represents any risk. Unfortunately, our deteriorating health is a far greater risk than the risk we're trying to avoid in coming up with new treatments and new ways to intervene. So I do think this pandemic should cause us to stand back and say, what is the responsibility a government has to its populace? Is it to avoid any kind of risk, or is it to provide more benefit than risk in each situation?
But this is risk management. And so is it because health experts within governments were not used to risk manage like they did the defense spending, or how do you explain that?
I think that the parallel with defense is something that's worth studying. I do think that our physical security, which is something that governments spend enormous amounts of money on and do a reasonably effective job at, should be an example for our health security. And if we're guaranteed health security, the way we would intervene with things, not waiting for diseases to be advanced before we'll do anything about them, would be thought of the same way we now think of wars. We don't just make expensive weapons, we try to go upstream. So I do think that lessons are plentiful in this recent experience. I worry that people are so tired and they want to get on with the next challenge ahead of them that they will basically miss the moment to learn. I think this pandemic could change the arc of how healthcare is done, but we're right in the moment where we may lose it or we may capture the moment.
But this goes back to what to govern spending. Are you here to try and get the government to look at health differently and diagnose, I guess, disease before we become sick?
So what you're referring to is an initiative we started even before the pandemic. We call this preemptive health and preemptive medicine. And the idea is, instead of waiting for late-stage disease, can we use the same technologies developed by tens of billions of investments over the last decades and move it way upstream so we could see a disease in its active formation and we could intervene with them.
I mean, this is before. Is it like gene therapy? Is it looking at gene or not necessarily?
It turns out, like, so of course, if you go to the earliest of early, you may have genetic predispositions to disease. That's a small fraction of the diseases we can now catch. We can think about pre-diseases like diabetes, other inflammatory diseases, Parkinson's, Alzheimer's. There is a pre-disease condition, cancer. If you look at colon cancer, where we've had a huge effect, most of the effect we've had is because we can catch things before they become cancerous, polyps. The same can be done in a molecular way for every other disease. Imagine if we put some amount of investment in that, what kind of returns that can generate in delaying or completely deflecting disease.
Yeah, it always goes back to spending.
Yes.
Remember, when you look at flagship, what's your next Moderna?
Hard for me to classify something as Moderna because Moderna wasn't Moderna until it emerged to be able to impact the world. But I can tell you there's many great exciting companies. Just yesterday, we announced a significant capital raise in one of our companies called Tessera, which is developing a whole new set of gene writing technologies. Yeah. The world has been filled with reports on gene editing recently. This is an ability to write genes very precisely to correct disease states. That's a very exciting new development. There's several other ones that are coming along very, very rapidly. So and as well in the sustainability area, where we also are bringing to bear these very advanced life science technologies.
So do you need a crisis to test them?
No, not really. Well, there is a slow way to testing them today.
Yeah.
I'd hate to believe that the only way to go faster is with a crisis. And so that's the question is, can we make the benefits of the crisis outlast the crisis? And that requires governments to really reconsider, well, actually evaluate all the things they got right, instead of just focusing on all the things they got wrong, because right in front of us are government-led actions that have shown ways to develop vaccines in months or a year without taking any shortcuts. Why would another vaccine not be developed that way, or every vaccine be developed that way?
But with skepticism also for a big chunk of the population. So we'll talk a little bit more about that, and we'll talk a little bit about maybe a fourth booster shot or some of the new vaccines they're working on. The Moderna chairman and co-founder Noubar Afeyan stays with us. Coming up, we continue our conversation with Noubar, and then later on the program, of course, it's the second round of the French presidential election. It takes place this Sunday. This show will be in Paris. We're also live on Sunday evening, so we'll look ahead to what promises to be a very tight race between Emmanuel Macron and Marine Le Pen. That's live from Paris, and this is Bloomberg.
financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now, still with us, Dr. Noubar Afeyan, co-founder and chairman of Moderna. Dr. Afeyan, thank you so much for sticking around. We had a good conversation about, some of the things that governments can do, maybe not to let this crisis go to waste, which is, the number one rule when you go through something so big. But talk to me a little bit about the biotech route. So we had, really an explosion of stocks in biotech. What does it mean for Flagship and your portfolio in general? Is this an opportunity, or is it something that makes you worry?
So look, biotech first and foremost is a long game in the sense that drug development, these are people's lives that are at stake, and it's historically been one that has gone through periods of expansion, followed by some periods of contraction, and again, this is the 35th year I've been working as an entrepreneur in biotech, and having seen a number of these cycles, I view what's going on as a direct result of the recent past. But more importantly, we're against a backdrop now, which is not biotech specific, but very broad in tech. It's in general. I think the key is to focus on what makes these companies impactful, create partnerships with large companies and pharmaceutical companies, and from there build again so that the winners, if you will, or the real powerful platforms emerge stronger out of this environment. And that's what we're seeing. Right now we're in the middle of it, so we're busy working on every single opportunity and what can be done to really stick to your core values.
So what you're telling me is ignore the noise. It's basically not look too much at the share price. It doesn't mean that you could buy something or even hire some of the scientists easier.
I think, well, it's quite ironic in that rents have never been higher in biotech. Finding employees has never been harder in biotech, ever, against a backdrop where the stock market values it differently than it did before. We'll see which one corrects to the other, but the reality is there is a lot of value out there, a lot of value, with strong teams and broad diversified pipelines. One of the things you see in biotech is when things get overheated, there's a lot of single shots on goal that represent themselves as companies. Those ones are more vulnerable because they really have nothing to retreat to. If one product has one bad news, the company is in very big trouble.
Why this mismatch?
I mean, the mismatch is a bit contextual, but also strategies that people are using. Again, I think if you think this is a long game, investing in companies that have many, many different outlets for some products that they're developing are a safer bet because they can outlast these kinds of periods. And that's what we focus a lot on as a result of having been at this for such a long time.
Where are we on COVID? So you have China with a very different, zero tolerance policy, and they're continuing with this and don't seem to be relenting. Here in Europe, hardly any people even wear masks. What's the right approach?
I've said from the beginning, from the very first time we spoke about this, that the whole COVID situation is a battle royale, if I can call it that, between one life form and another. The virus is basically got its own mind, and it really couldn't care less what we tolerate, what we don't tolerate. Basically, it will infect through social contact a vast swath of people, and it is mutating in order to overcome our immune response. So what we do as people, we're running many different experiments. Everybody's deciding to do what they want to do. It's been highly politicized. And I think what's playing out is this continued battle between our defenses and the offense that the virus can mount. Hard to say what is right. What is important is to recognize that we're not living individually, and whether people wear masks or not impacts other people's lives. And so this notion, I was on a flight over from the U.S. just the moments when the mask mandate was removed.
Oh, you were on the flight when they announced?
I got on a flight and they said people don't have to wear masks. And people, in a celebratory way, all took off their masks. The reality is on that flight, just based on statistics, there were immunocompromised people who were exposed. I wore a mask because I felt like I'm not flying on my own. I'm flying with a large group of people. So I think people are going to have to realize, why were we doing these things? Just because the government told us to, or because we're still under quite a bit of continued threat? I'm not saying it's the same level of threat. So I think everybody's going to have to kind of make decisions that are based on weighing risk and reward. And I worry right now that it's all being done like a pendulum swing, one extreme to the other.
So the right thing is maybe somewhere in the middle.
Yes.
Will we get a fourth? I mean, do you think we'll need a fourth booster shot?
Definitely a fourth booster shot has been recommended for certainly folks over 50 in the US, and in other countries they're making their own decisions, and that's what should happen. People should look at the facts and make their own determination. For me, being as I've stated publicly, after being boosted a third time, ultimately succumbed to getting infected.
Oh.
And that's just shows that on the one hand, the vaccine is not going to prevent any form of infection. On the other hand, when I got infected, I saw the full effect of the therapeutic value of the vaccine, which is that the T cells and B cells in my body got to work, and within 3 or 4 days, the symptoms. So I think that is an important thing. The vaccines are having a huge therapeutic effect, not only a prophylactic effect.
But so do you feel? I mean, do you feel like you're better protected now after having gotten it with 2 vaccine shots and a booster than if you had a fourth booster? Like, how should we look at this?
I think what's been clear scientifically, and the data really should drive our decisions. The data shows that after a few months, our frontline defense with antibodies diminishes, so we're more vulnerable to infection. Once we get infected, our defenses to fight back the infection are there. So fourth boosters should be taken by folks who want to avoid infection as much as possible. And it's very clear there that the fourth booster significantly reduces the chance of getting yet again infected. But again, that will also wear out. I suspect this will land to where there'll be an annual booster. And just recently, for example, the last couple of days, Moderna announced some preliminary data showing that 2 of the different vaccines we have combined had much broader coverage than the original strain, and
Which
we're
hasn't been
encouraged by that.
peer-reviewed yet, right?
It hasn't been peer-reviewed, but the data is the objective data. Over the last 2 years, all the data that's been coming out was coming out in real time.
So this is what exactly? An old type of COVID with the Delta one, and so it basically protects you for more strains?
So the experiments we revealed were the original 1273, which is what's called Spikevax now, combined with a beta-specific sequence. That showed broad coverage. We're now testing in humans an Omicron coupled with the original one together, so that by the fall, if all testing goes well, we'll be able to give much broader coverage net than we would with the original just single strain. And that, we think, is how things are going to develop, is that we're not going to go chase the next virus, but we want to expand the net of coverage.
All right, I need to go back to ancient Greek school, because I call it Delta instead of Beta. Thank you so much, Dr. Noubar Afeyan, co-founder and chairman of Moderna. They're joining us in the studio. Now let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Bill Ackman has ditched his stake in Netflix after losing more than $430 million on his investment in less than 3 months. Ackman's Pershing Square Capital Management sold its holdings after Netflix reported an unexpected drop in subscribers last quarter and projected an even steeper decline in the current one. Ackman was one of the streaming giant's 20 largest shareholders. Now, Tesla has reported better than expected first quarter results on strong demand for its electric vehicles. This comes as ongoing supply chain challenges and a COVID-19 lockdown in Shanghai crimps its production in China. Tesla saw profits totaling $3.22 a share. It is the first major U.S. automaker to report first quarter results. And that's your Bloomberg Business Flash. Francine.
Leanne, thanks so much. Coming up, 15.5 million people watched last night's TV election debate, the only one ahead of Sunday's vote in the French presidential election. We'll bring you all of the details live from Paris. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Well, it's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Why did you do it? And I say this with great gravity tonight, because for our country, this is bad news. Because you depend on the Russian power and you depend on Mr. Putin.
I truly want to make purchasing power the priority of my next 5-year term if the French have confidence in me.
Well, French President Emmanuel Macron and his nationalist opponent Marine Le Pen there. Now, the two candidates for the Élysée Palace went head-to-head last night in the only televised debate before the final round of the presidential election on Sunday. Macron warning his opponent risks starting a civil war with a ban on Muslim headscarves, while Le Pen, meanwhile, sought to portray the president as an elitist enthralled to global finance. Let's go live to Paris and Bloomberg's Caroline Conant. Caroline, I was one of the Outre-mer watchers. I watched it from London. It was 2 hours and a half, boring at times, spicy at other times. Who performed better in the debate?
There was this poll, Francine, after the debate from ELAB showing that about 59% of the French people who watched this debate thought Emmanuel Macron was the most convincing and had the best project between the two. However, Marine Le Pen appeared as the one with dealing with the issues of the French people, the daily concerns of the middle class. So clearly she appeared more composed and more comfortable than last time in 2017, and he made every effort to not sounding too technocratic and arrogant, but still they had a few battles on different numbers, including inflation, growth, and a lot of punchlines, for example, on banning the headscarf in all public places, which is one proposal from Marine Le Pen that Emmanuel Macron described as an action of civil war. A lot of other punchlines we'll see over the next few days how this plays. There's only a couple of days of campaigning before the runoff on Sunday.
So, Caroline, how important was this debate? Were they trying to convince the undecided voter to vote for them? Like, who does the left vote for? The people that in the first round voted for Jean-Luc Mélenchon?
So, Jean-Luc Mélenchon came third in the first round, as you know, with nearly 8 million French voters. And this is clearly the voters that both Emmanuel Macron and Marine Le Pen are trying to attract in their camp. About 50% of those hard left-wing voters are planning to abstain in this runoff. But last night, actually, Emmanuel Macron performed better among Mélenchon's electorate, because about 60% of those who voted for him a couple of weeks ago said that he performed better and he was more convincing on issues including climate, which is obviously an issue that is very important for this left-wing electorate. On this issue of climate, for example, Marine Le Pen accused Emmanuel Macron of being hypocritical. Emmanuel Macron replied, well, you are skeptical about climate. So we'll see how this plays. There could be still a lot of abstention. On Sunday, there was 25% of abstention last time around. And there was some analysis from Goldman Sachs or Citigroup saying that there is still a chance, if abstention is really high, that Marine Le Pen could make it.
Yeah. All right, Caroline, thank you so much. Caroline Conan in Paris will be joining Caroline also in Paris. So we'll be live with that beautiful back shot. Always a good idea, looking at the Eiffel Tower. And then we're also live on Sunday for 2 full hours to go through the election results with you. Don't miss it. It could be a game changer. It could move markets. So Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller and Katie Lyons in New York, Anna Edwards in London. This is Bloomberg.
but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question. It's a great question. Great question. Great question. Great question. Great question. That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic. We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
The world economy is facing some real serious challenges.
I am really worried about what we're going to see in terms of the economy in the second half of the year as rates go up.
There's nothing wrong with being a picky stock buyer in this environment.
When you get to the peak in growth, which could be, who knows, 3, 6, 9 months away, possibly even longer,
then maybe some parts of tech start to look really interesting again. This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Thursday, April 21st. Our top stories today. Tesla shares jump in pre-market. Elon Musk's electric vehicle company reports a record profit and forecasts a big jump in production. Meanwhile, Musk's Boring company raises money at a valuation of nearly $6 billion. Bill Ackman pulls the plug on Netflix. He sells his stake after losing more than $430 million in less than 3 months. And Vladimir Putin's saber-rattling. Russia test fires a new ICBM as a warning to the US. Plus, he claims his forces have captured the port city of Mariupol. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lines over in New York. And from a market perspective, Kaylee, a lot of focus will be on some central bank speakers later on today.
Yep, you'll have Jerome Powell, Christine Lagarde, as well as IMF Managing Director Kristalina Georgieva, all speaking on a panel around 1 p.m. Eastern time. So the market certainly will be hanging on each and every word. Now, as for how the session struck out in Asia overnight, it really was mixed. You had Japanese equities higher, but a lot of underperformance coming from Hong Kong and China. The CSI 300 in China down 1.8%. You had a speech from Xi Jinping in which he essentially just defended China's COVID-0 policy, saying that they have to defend people's lives and people's health. And investors are saying, what about defending the Chinese economy? The fact that he didn't really outline any further policy support weighing on Chinese equities today. It really was tech stocks that bore the brunt of the pain. The Hang Seng Tech Index was down about 3.5%, and some underperformers within that included electric vehicle companies, one of them being Li Auto, which warned overnight about supply chain issues stemming from lockdowns in places like Shanghai. They say that will delay some delivery of new vehicles, so that stock was down more than 4%. And of course, Matt, have to do my daily check on the Japanese yen. It is weaker once again against the US dollar today, trading right around that 128 level. We remain around the lowest in 2 decades.
Yeah, I feel like every day you check the Japanese yen,
I
and
do
every
indeed.
day it's at 128. So maybe it'll move a little bit at some point. We are seeing movement in S&P futures right now, up 0.8%. Interesting that Kaylee points out EV makers are down in Asia, because one of the big reasons for the gain on futures today is that big EV maker Tesla did so well in terms of earnings, beating on revenue, beating on EPS. So definitely take a look at that in pre-market movers. In terms of the 10-year yield, it's adding about 3.5 basis points right now to 286.70. So rising, but still not back up. You know, yesterday at this time we were looking at 290. And we're still not up to that level. Yesterday at this time we were looking at 103 and change on Texas Intermediate crude. We're still looking at that. Right now it's up about 1% from the close. But 24 hours ago, it was the same price as it is now. And Bitcoin as well. Looked the same yesterday. It's a little higher right now, 1.2%, but this has been a strong correlation, or typically is a strong correlation, especially to tech stocks. So if Bitcoin is trading at just about 42,000, maybe tech stocks are going to rise and help lift the rest of the market today as well. Anna, what do you see in Europe?
Yeah, sentiment generally here in Europe, Matt, full risk assets looking pretty buoyant. We have European equity markets in the shape of the DAX and the CAC moving higher by around 1% or so. The London market is weighed down by the mining sector, the basic resource sector, under pressure today as a result of, well, yesterday it was Rio Tinto weighing on the sector. Today it's Anglo-American. A little bit of disappointment around what's being produced there. In terms of the sectors moving higher, we have the aviation sector doing really well. That's on the back of those United numbers that you guys reported over in the United States yesterday. The ECB story is on the move, and this is something to focus on. I put in here the French 2-year yield. This is the short end of the curve really on the move. We see 2-year yields rising in France, in Germany, in Italy, and I could have picked other parts of the Eurozone as well. We also see the euro moving higher, up by 0.7%, has a 109 handle, Matt, which is a bit of a change from recent days. And this is all because we're getting more and more hawkish commentary coming through from the ECB, or relatively hawkish commentary, talking about the possibility of a hike in July, and it is possible, according to Luis de Guindos. He's the latest to make such a statement, and he's the vice president of the ECB, speaking on the day that Christine Lagarde will talk later. We'll see what she will say, whether she'll add to that dynamic. And here's a couple of companies that have been talking about pricing power this morning, and that story has gone down well with markets. Nestle, the food company, up by 1.2%. Their numbers better than estimates. AkzoNobel, the paints and coatings business, up by 4.4%. Also numbers better than estimates. And both companies talking about pricing power. AkzoNobel actually saying they expect costs to increase in the second quarter but to come down in the second half, and that's another added dimension to the story there. Just checking on Russian assets for you. A big focus, of course, on Russia and the Russian currency at the moment. We've been hearing from the central bank governor, Nabiullina, and she's been saying that we could see another rate cut coming through. We had the emergency hikes in February and then a cut earlier on this month. We could see another one. She's been reiterating this morning. She's also said that she thinks Russia needs to avoid economic self-isolation. We know that that is part of the direct policy of Western governments to bring about that, but that's an interesting comment made by her today. And of course, there's a lot of focus, Kaylee, on the debt over in Russia. We heard from the CDDC, that body that evaluates whether there's non-payment of debt, and they have said there's a possible mispayment here, but there is a grace period, so we have to wait until early May to see whether those payments that were made in rubles come through in dollars.
Yep, we'll all look out for May 4th when that deadline is. Now let's talk about what else we're looking ahead for on today, April 21st. Of course, Hong Kong is scheduled to lift some COVID restrictions, including allowing restaurants to reopen dinner service until 10 p.m. We'll also get some U.S. economic data, initial jobless claims and continuing claims coming at 8:30 a.m. New York time. The Bank of England Governor Andrew Bailey will be speaking at the Peterson Institute for International Economics at 12:30 p.m. New York time. And of course, as I mentioned, Fed Reserve Chair Jerome Powell, ECB President Christine Lagarde, together will be speaking at an IMF event, Matt.
What about weed?
What about what?
Weed. Today is the first day that you can legally buy and sell weed in New Jersey.
Oh, there you go.
Anyone looking for...
I was like, 420 was yesterday.
Yes, good point. I don't know why they made it one day later, and the fish run started yesterday too, but today, New Jersey, I heard from Michael Barr on Bloomberg Radio this morning, New Jersey is selling marijuana legally. Let's get to, well, a 420 fan, Elon Musk. Tesla reported better than expected first quarter results. Musk predicting bumper production growth this year, even though we have these supply chain issues. He spoke on the earnings call yesterday.
We remain confident of a 50% growth in vehicle production in 2022 versus 21. I think we actually have a reasonable shot at a 60% increase over last year.
All right, so no mention, by the way, of his Twitter bid on the earnings call. Let's get more with Bloomberg's Laura Wright, who followed along. Laura, what do we know?
Well, Tesla rallying in the pre-market. It was record profit, revenue up 81% year over year for the period. Elon Musk said he's never felt more optimistic about Tesla, so make of that what you will. Yes, supply chain issues are here to stay for 2022, but Tesla, they've been astute, managing to raise prices for the year in order to offset that. The key question regarding the Shanghai plant, which is now Tesla's key global production hub, supplying not only Asia, but also exporting to Europe. It was shuttered for most of March, but it is back with a vengeance, according to Elon Musk. And those delivery goals, which Elon Musk was alluding to, on track, he believes, for 1.5 million deliveries of vehicles in 2022, and sticking with that goal of 50% average annual vehicle growth.
All right, so Elon Musk is sticking with his goals. Let's talk about another tech stock and someone who's not sticking with it. Bill Ackman abandoning Netflix after a pretty heavy loss. Laura, what can you tell us?
Yeah, buy on the dip, sell on the dip. That appears to be the strategy of Bill Ackman, and it just seems that a 62% year-to-date loss was simply too much to take. He doesn't believe that the changes Netflix are making regarding passwords, and also, they're creating a cheaper service that will include adverts for their customers. That is not enough for the hedge fund manager, so he wants out. But it raises the question of whether this is a precipitous exit, given that direct-to-consumer content is irrefutably the direction of travel for us.
Laura, thanks very much. Bloomberg's Laura Wright pulling together a couple of tech themes for us overnight. Now, back to the geopolitics, and President Vladimir Putin says Russia has seized Ukraine's Mariupol, even as his defense minister said more than 2,000 troops remain holed up in an industrial complex in the strategic southern port city. Russia also says it test-fired a new intercontinental ballistic missile, an ICBM, a move that Putin says would give the United States and its allies, quote, something to think about. Anne-Marie Hordern, Bloomberg Washington correspondent, joins us now in D.C. And any sense of what the United States thinks about this at this point?
Well, it really is clear at the moment that this final siege of Mariupol is underway, and you have President Putin on state TV being broadcasted this meeting he had with his defense minister, Sergei Shoigu, and he said taking control of such an important center in the south as Mariupol is a success. Now, this is so key because this really connects Crimea to also controlling Donbass. So this would give them such a strong foothold and control of eastern Ukraine. We do have an update from the White House saying that the president now will be discussing an update on Russia and Ukraine. We are waiting for potentially more military aid. Our reporting from earlier this week is about $100 million. And this is as the allies are really concerned about Ukraine being able to control parts of eastern Ukraine.
We also had, on the domestic front, Anne-Marie, the administration is going to appeal, or the CDC rather, is going to appeal the overturning of the mask mandate. What does this mean? Because I imagine this is going to take weeks, if not months, in court, and the mandate was supposed to end anyway in a couple weeks.
Yeah, and it's really created a lot of havoc, and also it does feel like a bit of whiplash in Washington in terms of lawmakers unsure how to respond to this, because you're really starting to now toe a line between what the public potentially wants. And Matt, as you say, this could take months, meaning this can go well into the midterm election. What we do know is that the DOJ is going to appeal this, and they have been waiting and say it all comes from the CDC. So let's look at what the CDC has come out with last night in a statement. It is the CDC's continuing assessment that at this time, an order requiring masking in the indoor transportation corridor remains necessary for the public health. CDC believes this is a lawful order well within CDC's legal authority to protect public health. So you're going to see the Biden administration really put this into the hands of the CDC. But what a lot of this comes down to, and why this appeal is they decided to go for this appeal, which obviously a lot of political pressure on both sides, whether or not to go for it or not.
Anne-Marie, thanks very much. Anne-Marie Horton in Washington for us. Now, the two candidates for the French presidential election went head-to-head last night in the only televised debate before the final round of the presidential election. That takes place on Sunday. Emmanuel Macron strongly attacked his far-right election challenger, Marine Le Pen, for her links to Russia.
Why did you do it? And I say this with great gravity tonight, because for our country, this is bad news. Because you depend on the Russian power and you depend on Mr. Putin.
Meanwhile, Marine Le Pen insisted the French will be better off on security and purchasing power under her rule.
I truly want to make purchasing power the priority of my next 5-year term if the French have confidence in me.
Now, Bloomberg's Caroline Conan joins us now in Paris. Caroline, this is an important debate then, just days before the French go to the polls in the final round of this presidential election. The two going head-to-head. What do we take away from the debate?
The stakes are pretty high, especially for Marine Le Pen, given currently that Emmanuel Macron has got an 8-point lead in the latest polls for this runoff taking place on Sunday in France. And clearly, last night, Marine Le Pen really tried to appear reassuring, to appear more moderate, more mainstream, trying to give away some of her radical views on immigration or on Europe. So Emmanuel Macron really tried to refrain from sounding arrogant or too technocratic. There were a lot of punchlines during the debate on Europe, on Russia. You heard the president accusing Marine Le Pen of being dependent on Vladimir Putin because she had this loan from a Russian bank. Also, Emmanuel Macron accusing Marine Le Pen of starting a possible civil war if she tries to totally ban the headscarf in all public places. So overall, about 59% of the French people who watched that debate last night thought that the current president, Emmanuel Macron, was the most convincing and that Marine Le Pen was still roaring on her project, but she was also seen as more tuned with the daily issues of the French people. So we'll see if this moves a little bit the needles before Sunday's runoff.
All right, just 3 days to go. Bloomberg's Caroline Conan in a beautiful Paris. Thank you so much. And don't miss our coverage of that final round of French presidential elections this Sunday, 2 p.m. in New York, 7 p.m. in London. Meanwhile, talking of Europe more broadly, traders are betting the ECB will raise rates above zero this year for the first time since 2012. That's after a string of hawkish comments from policymakers. Let's get more with Bloomberg's Danny Berger. Danny, are there any doves left?
Look, Kaylee, there are doves left, to be clear. A lot of the noise we have heard over the past 24 hours has been from already more hawkish policymakers. But for those keeping track, it's 4 governing council members just in the past 24 hours that have said we could see a rate hike as soon as the start of the third quarter. Now, as I was saying, hawk's gonna hawk. The market didn't move too much, except for around 7:30 a.m. UK time. DeGuindos joins that choir, saying that a hike is possible in July alongside the APP end. Now, he's a little bit more middle of the road, so this did get a market reaction. The market reaction was swift. You saw the euro at one point as high as 0.9% versus the dollar, now around 0.6, but bumping up above 109. At the same time, front end of Europe, those rates also getting pummeled, 12 basis points higher on your German 2-year yield at 16.7 basis points, 16.7 basis points. This is the highest on the yield since 2014. So this is a market that is now taking this growing consensus more seriously. That also factors in just generally to the ECB pricing as well. Now we're looking at 75 basis points worth of hikes priced in by December. This would take us not just to zero, Anna, but to a slightly positive level when it comes to ECB policy.
Yeah, the conversation around the ECB moving fast. We'll listen out for Christine Lagarde, amongst other central bank speakers, of course, talking later today. Bloomberg's Danny Berger, thank you very much. Coming up on this program, Seema Shah, Chief Strategist and Principal Global Investors, will ask her about the path forward for global central banks and the emerging crisis for emerging economies. Rising food and energy prices might just be the beginning of a much larger global threat. Read more on today's Big Take story by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy. If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Earnings season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. A bit of breaking news coming through on the Bloomberg terminal. The China state energy firms are in talks for Shell's Russian LNG stake. And this is a fascinating story as Shell pulls back from Russian operations, of course, because of the invasion of Ukraine. Chinese companies see an opportunity to get in. Specifically, CNOOC, CNPC and Sinopec Group are in joint discussions with Shell over the company's 27.5% holding in the Sakhalin 2 LNG venture. So we'll watch that. We will watch how China plays its relationship with Russia right now. Let's get back to the markets, though. Dana El-Baltaji joins us, Bloomberg managing editor for credit. And Dana, I really want to start with you on the ECB story that seems to be very quickly on the move. We heard from Danny Berger about this, and I was talking about the move in the short end of the German curve, the French curve, and in the euro. Traders now betting that we will go beyond zero on the interest rate here, in the eurozone this year. 3 hikes now priced in. This is moving quickly, it seems.
Absolutely, it is. And in fact, I mean, you can almost say that this is quite slow in regards to the other central banks in the world. I mean, everyone knew that inflation is a problem, and I think people had suspected that the ECB would slow down its dovishness and become slightly more hawkish. And now, of course, we don't have concrete evidence of this just yet, but it seems to be building up, and people start to be more convinced that the ECB will act. Now, this, of course, is going to have an impact across European markets as a whole, not just rates, of course. I mean, bonds have not priced this in completely. The company bonds are still at risk of a sell-off here.
All right, but of course the ECB is still a huge laggard when you look at expectations for where the Fed ends the year at 225, 250, expectations where the Bank of England ends the year at 1.5%. The ECB is going to be, 50 to 75 basis points?
Yeah, exactly. And that's why the euro might still be the funding currency of choice. The funding costs here are still very low, and even with these changes, they're still going to be much lower than their peers. So it's very, very likely that you will find more and more issuers that will come to Europe and to take advantage of these lower costs. However, this zero rate environment is leaving us, and that is going to have an impact. But on a global scale, exactly as you said, it is still a lot slower than the rest of its peers.
Okay, Dana El-Baltaji, thank you very much for your thoughts. And for further market analysis, check out MLIV Go. That is the function to use on your terminal. That's where you'll find the Markets Live blog. This is Bloomberg.
Stories about what they call black soot caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now. We are dying slowly but surely, and our lifespan is reducing every day.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
Keeping you up to date with news from around the world, here's the first word. China's President Xi Jinping has defended his country's reliance on lockdowns to fight coronavirus despite mounting economic woes. In a speech, Xi reaffirmed the underlying goal of minimizing deaths. China's in the midst of the worst COVID outbreak since the beginning of the pandemic. Coming up, we'll talk about the economic implications of China's lockdowns, as well as the case for technology stocks after earnings from Netflix were sour. Tesla, though, beating expectations. Seema Shah, chief strategist at Principal Global Investors, will be joining us next. This is Bloomberg.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Tesla shares jumping pre-market. Elon Musk's electric vehicle company reports a record profit and forecasts a big jump in production. Shares are rising in pre-market trading. Meanwhile, Musk's Boring company raises money at a valuation of nearly $6 billion. Bill Ackman pulls the plug on Netflix. The billionaire investor sells his stake after losing more than $430 million in less than 3 months. Ackman says he has learned from past mistakes to get out of bad bets early. And Russia fires a new ICBM in what's seen as a warning to the United States. And President Vladimir Putin declares that his forces have taken the Ukrainian port city of Mariupol, even though his defense minister says Ukrainian troops are still holed up there. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. Matt, quite buoyant markets here in Europe. Certainly the markets that aren't focused on basic resource stocks are doing pretty well today. The earnings story front and center here in Europe. What's in focus for you?
Yeah, we see, commodities prices rising. That's why basic resources stocks are doing well. But here it's really about Tesla. I'm just obsessed with the fact that they made, $700 million selling their credits for zero carbon, for zero emissions. It's just awesome, and it's helping to power the rally in futures because it's such a big tech stock, over $1 trillion in market value, and it's helping to boost the entire market here. Also, investors feel comfortable enough to sell the perceived safety of government debt, so we now see the 10-year yield rising a little bit more than 4 basis points. Still not to the same level it was 24 hours ago, yesterday at this time, but 287.47 is a pretty high level that we can talk about. NYMEX crude at 103.28, so this is one of the gains in commodities that we're talking about that's helping boost over there, right? BP, World Dutch Shell, such a commodities-heavy index, certainly the FTSE and the rest of Europe as well. And Bitcoin up more than 1%, 41,917. So gaining slowly but surely back again. Maybe it's not a crypto winter. What do you see, Kaylee, in terms of pre-market movers?
Well, I have to talk about Tesla even more, Matt, because of course, as you said, that's really driving a lot of the action at a broader level today because it's a pretty sizable move in pre-market trading, up nearly 7 full percent. And remember, this is a $1 trillion company, so that moves a lot of weight. Analysts really positive on the quarter, especially how optimistic they sounded on the forward outlook, even in the face of supply chain issues that they say could last throughout the remainder of 2022. And of course, it wasn't just Tesla that reported after the bell yesterday. We heard from United as well, and they say they will return to profitability in the current quarter, the second quarter. It would end a streak of 9 consecutive quarters of losses. So that stock is up about 7.4%. It's giving a lift as well to American Airlines, which will report before the bell today. So just a couple hours from now, it's up 5.5%. But then wanted to make mention of Netflix as well, because of course that was the story of yesterday, Anna. 35% drop for that stock. No dip buying coming in today. It's down another 0.7% in early hours. And we know Bill Ackman has now abandoned his stake, a $430 million loss on that, Anna.
Yeah, as we said in our headlines, he's learned from his mistakes and to get out early. You mentioned there the United story, the airline story, and that is actually having an impact on this side of the Atlantic, Kaylee, as well. So we see buoyancy for European equity stocks up by European equities up by 0.4%, and aviation stocks are at the forefront of that. So travel and leisure, the best performing sector here in Europe today. The worst performing is that basic resources sector, because here, from a European perspective at least, disappointment around Anglo and the results there from Anglo-American, that is weighing on that particular market. The euro in focus. We had 2-year debt in focus as well, as we talked about in the first half hour of the program, as the ECB conversation turns a little bit more hawkish. Today it was the turn of Luis de Guindos, the vice president of the ECB, and with his commentary that a hike in July is possible, that has certainly added to some upward momentum for the euro. 109.19 is where we trade. A couple of earnings stories for you. This one is all about pricing power. 1.2% higher for Nestle. It seems we're willing to pay up when it comes to coffee and when it comes to chocolate. They are cautious about costs in the months and the quarters to come, but certainly the numbers going down well with investors and beat estimates. Continental, I put this in. This is a supplier to the auto sector, of course. I put this in because it looked like a negative story. They've downgraded their guidance. They're concerned around costs, but something in there went down well with investors, and the stock is still moving higher, up by 3%. A quick check on Russian assets. We've seen the Russian stocks down by 0.1%. A lot of focus on central bank policy there after a big hike in rates in February, a small cut in rates in early April. We've heard from the central bank governor that we could see another rate cut coming. We also have heard from the CDDC on the subject of Russian debt, so the Credit Derivatives Determination Committee, and they've said that there could be a non-payment event that could trigger CDS, but we have to wait until early May to get real clarity on that after the end of a grace period, Matt.
All right, excellent. So we have a look at Russia there. Let's take a look at what's going on in Europe, what's going on in England, and what's going on in the U.S. Because I've got a chart that shows what the central bank movements are expected to be. I was talking about this earlier with Dana El-Baltaji. Let's talk about it with Seema Shah. Now, the ECB isn't going to be nearly as high as the rest in terms of the 2022 terminal rate, I suppose we could call it. A chief strategist at Principal Global Investors, Seema Shah, joins us now. Seema, what does this mean? The fact that the ECB, you know, they're prepared to get a little bit more hawkish. For them, it seems really hawkish, but nothing compared to the bigger central banks.
Hi, Matt. Yeah, I mean, I think that's key, is even if the ECB is becoming a little bit more hawkish, and we're going to see rate hikes this year potentially, that would still leave them so significantly behind the US. But in terms of your relative trades, in terms of your currency perspectives, it doesn't change too much. But I do think the key thing is it does introduce a fair amount of volatility at a time that I don't think Europe can really afford it.
Okay, good morning to you, Seema. If I look at the GMM function on the Bloomberg terminal, I can see that the French 2-year yield is higher, the German 2-year yield, the Italian 5-year yield. It does seem the short end of the curve is responding to this kind of commentary coming through from the ECB. How quickly do we see these yields move higher then, do you think?
I mean, I think it could be quite rapid, but really it depends on how far we're likely to see them. And I think, well, the comments that we've seen from the ECB officials in the last few days are really, really important, because we have to think that they, just like the Fed, will be aware of how much volatility they're going to introduce into the market with these comments. So these will have been well thought out, and I think they're giving us a very clear signal. But at the same time, are we really going to see rates move significantly higher? So a 50 basis point move in the next 6 or 7 months or so isn't going to move yields too far, considering they've already moved significantly in the last few weeks.
How much do we really listen to central bankers, in the best sense of the word, on this subject when there is so much uncertainty about how the Eurozone economy performs, and in particular with geopolitical questions and political questions hanging over the Eurozone economy around the possibility of embargoes of more energy products, and there's nothing certain about that. But if we saw that, the Eurozone economic story would change so substantially that things would be very different for central banks.
And I think that's absolutely key. I know from my perspective, I've been very much of the idea that the ECB is unlikely to hike this year, given the deteriorating economic outlook. And as you said, it's risk. We don't know what's going to happen over the next 6 months. But I do think that the ECB officials, some of the commentary in the last few days have been so clear and indicating that actually they need to put the real economy behind them when they're thinking about normalization. And that is a very clear signal.
All right, Seema, so where does that leave Europe relative to other markets like the US for you?
Yeah, still for us, the US is the clear outperformer from here, from an equity market perspective. You know, we know that the US is less vulnerable to this geopolitical conflict than Europe is. We know that the risk outlook for Europe is that much greater. And actually, we can see a potential recession in Europe just this year, whereas for the US, it's a little bit further out. So from that perspective, it doesn't change too much.
But the U.S., of course, Seema, also is heavily weighted toward technology. To be positive on the U.S., do you also have to be a little bit more optimistic on some of those growth names?
I think that is important. And certainly from our perspective, we do think this is still the time to have a slight overweight to some of these tech firms. But importantly, it's a mega cap tech. You have to differentiate at this stage. It's not really about the non-profit ones, which I think will struggle in this kind of environment. For the mega cap tech, you know, yes, rising bond yields, high bond yields are something of a challenge. But we also think that bond yields are quite close to the topping out. We've been talking about in the market most recently about inflation likely to have peaked. So from there on, I think the situation for big cap tech becomes a little bit easier, and we have to think about quality. It's more than large cap. It's really about quality firms, one of the big balance sheets and pricing power.
Yeah, we're looking at the 10-year yield right now. The chart is striking. Over the last 12 months, just climbing up almost to 3%, Seema. Yesterday, we heard Bank of America say they're going long the 10-year and expecting rates to finish off 2022 at 2.25%. What do you think about that?
Yeah, we're similarly in line to that. So we're thinking by the end of the year around 2.4%. You know, we do think, look, inflation is extremely high, but we do think from here, within the next couple of months, unless there's a major upset within the supply chain dynamic, that we should see inflation starting to come down slightly. And then when you start to think that, look, if there is a chance of recession in the next couple of years, it's quite difficult to see US 10-year Treasury yields move sustainably above that 3% point.
Seema, thank you very much. Seema Shah, a Chief Strategist at Principal Global Investors. Thanks for spending time with us here in London and on Bloomberg TV. Now, coming up on the programme, Elizabeth Braw, Senior Fellow at the American Enterprise Institute, will get her perspective on the victory that President Putin is declaring in Mariupol, even though there are still, of course, Ukrainian troops and civilians present. This is Bloomberg.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Well, Russia's President Vladimir Putin has declared that his forces have seized the key Ukrainian port city of Mariupol. It would be the biggest city taken during Russia's 2-month invasion. Still, Russia's defense minister says more than 2,000 Ukrainian troops are still holed up in an industrial complex in the city. Joining us now is Elizabeth Braw, Senior Fellow at the American Enterprise Institute. Elizabeth, great to see you as always. If Mariupol has fallen, what consequence does that have for the war more broadly?
It would be a major breakthrough for the Russians. Mariupol is located at the end of a strip of land going all the way, so it has sea access, and then the strip of land goes up via the two breakaway republics of Donetsk and Luhansk and all the way up to Kharkiv. And if Russia has indeed seized Mariupol, this is a major breakthrough in Russia's efforts to securing this strip of land, which could then be presented as a victory in this war. And we should remember that the 9th of May is when the Russian leadership wants to present some sort of victory to the Russian public.
So if they secure a land bridge, so to speak, to the Crimean Peninsula, will they consider that? Will Putin consider that enough of a victory to cease fire?
That is likely. So we have to remember that originally Russia went into this war calling the special operation to denazify Ukraine, but there is no doubt, I think, now in the Kremlin that Russia is not going to be able to change the whole of Ukraine. But winning this or conquering and holding this strip of land could be presented to the Russian public, which of course doesn't get neutral information, could be presented by the Russian government as a victory. And we should remember that Crimea at this point sits sort of isolated there. And so if you're able to tell the Russian public, your voters, your supporters, that now we have this strip of land that connects Crimea to all the way up to the Russian border. That would be something that would be easily sellable.
You know, we hear from Russian officials that it's possible Putin uses tactical nukes. On the other hand, yesterday we saw the testing of an intercontinental ballistic missile capable of carrying the big stuff. How much of a threat, how much of a nuclear threat is Russia right now?
So Russia, like the United States and the UK and France, doesn't have a no first use policy, meaning that if it feels its existence is threatened, it reserves the right for itself to use nuclear weapons. Still, I think it's unlikely simply because the risks for Russia would be so high because if you use nuclear weapons, then nuclear weapon states are likely to respond with nuclear weapons. That would be a phenomenal disaster, an incredible disaster for Russia. So yes, they keep talking about it, the Russian, various Russian spokesmen and women, but I think it's highly unlikely.
Elizabeth, give us your insight into what's taking place in Finland and in Sweden right now. Certainly Finland in focus this week as we saw Finnish lawmakers begin debating NATO membership, and that process now looks to be, well, is it in process? Is it in train, and how long will it take?
What we're seeing in Finland is absolutely remarkable. The Prime Minister Sanna Marin a few days ago obviously announced that Finland will now spend a few weeks deciding whether to apply for membership, and they are wasting no time. This week, Parliament has been debating NATO, and it's incredible really to see the shift in public support and now parliamentary support for NATO membership. 112 out of the 200 members of the Finnish Parliament now say they are in favor, and only 43 say they are against, and 33 are undecided. So it's a remarkable change. In essence, now there is a majority in the Finnish public and in the Finnish Parliament for NATO membership. We should remember that the Prime Minister Marin said that the government wants as wide support as possible for this step if they do take it, which now seems likely.
Yeah, and this would seem to change the military balance in the Baltic Sea quite significantly, Elizabeth. And how would you expect Russia to respond to that?
A Finnish membership of NATO would change the balance in the Baltic Sea region, and if Finland joins, Sweden is highly likely to join as well. And they both have significant military capabilities, especially Finland, with its long experience of guarding a very long land border with Russia. Sweden has excellent naval capabilities, which would be a huge asset in the Baltic Sea itself. Russia is likely to roar again and issue threats against Sweden and Finland and NATO, but at this point it's militarily tied up in Ukraine. And I think it's highly unlikely that it would be able to expend any military effort on Sweden and Finland, even if it wanted to.
Elizabeth, finally, Vladimir Putin earlier this week was talking about Russia's economic resilience, saying that the economic blitzkrieg failed to work. But of course, Europe has not actually acted on Russian oil and gas. If that were to happen, how, if at all, would that change the calculation for the Kremlin?
Yes, what has happened so far is that Russia has been able, ordinary Russians have been able to keep living their lives and being able to buy food and so forth. So then one could say, as Putin does, well, look at that, your sanctions didn't work. But of course, sanctions are never particularly effective in the short term. If European countries, especially Germany, were to cut off gas imports, that would have a major impact on the Russian economy. Germany just announced it will cut off oil imports from Russia, but that's a smaller part of oil imports from Russia. So that is the big decision that we're all waiting for. Then again, Germany would, as the government keeps saying, Germany would suffer more itself if we were to cut its gas imports from Russia than Russia would as a result of such a move. So it's a very delicate balance in Germany, and we are all watching very closely what the government will what it decides to do, because it's a coalition government and there are very different opinions even within this government.
Right. I think Germany certainly moved, and the EU has moved on coal. We will see what they decide to do around oil and around gas. We spoke to the German finance minister, and the suggestion was they were open to moves on oil, but we'll see where that develops. Elizabeth, thank you very much for joining us. Elizabeth Brawl, Senior Fellow at American Enterprise Institute. Coming up in the next hour, Valdis Dombrovskis, European Commission Executive Vice President. That is at 6:30 a.m. in New York, 11:30 a.m. in London. This is Bloomberg.
the Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kaylee Lyons in New York and Anna Edwards in London. We are joined now by co-anchor of Bloomberg Surveillance, Tom Keene. And before we look at your single best chart today, Tom, let's get to Europe because we've just had headlines cross from Valdis Dombrovskis.
Well, we do, and it's a simple headline. Russia closes some Estonia, Latvia, Lithuania consulates, and this is the tension in the Baltic states. I mean, all the focus is on Ukraine. The former Prime Minister of Latvia, Mr. Dombrovskis, will join us now, his service in Brussels and with the EU. And I would say that all of a sudden it becomes a more timely conversation, Matt, because we will speak to him, of course, of the actions of Sweden, as you were just talking about, catching up with Finland on what do they do in their future.
And you are never far away from a chart, Tom Keene. So tell us what is on your mind today. I believe the dollar.
Yeah, it's a dollar. It's in honor of what we see at IMF and World Bank as well. And it's a different view of the dollar. This is how the real world looks at it. Economists look at it as inflation adjusted, which is fine, but they look at it inflation adjusted. Here it is nominal. And the bottom line is, you see in 1985, the massive surge in the dollar, an incredibly strong dollar as well. And, I'm going to give it over to you. I've got some major audio troubles here. What it is a resilient dollar going up. Anna?
All right, Tom, I'll pick it up there. Thank you so much. Perfectly delivering a chart despite some audio issues. Co-anchor of Bloomberg Surveillance, looking forward to your coverage coming up in just a few minutes. Now, coming up throughout the day, let's take a look at what we're watching. I will be watching some important speakers at 1 p.m. Eastern Time. You'll have Fed Chair Jay Powell, ECB President Christine Lagarde, and IMF Managing Director Kristalina Georgieva all speaking in a panel debate on the global economy. My question is, Jerome Powell basically told us that the Fed was going to move 25 basis points in March. What does he have to say about 50 basis points in May? Could he solidify that for a market that has now fully priced it in? And with Lagarde, how much does she agree with the chorus of governing council members, Matt, who have come out drumbeating toward July in recent days?
Yeah, those people are pretty important, but I'm watching one of the most important figures in the world. In fact, I was reminded by Elizabeth Braw, we just had her on. She tweeted earlier, happy birthday to an indefatigable public servant. I often poke fun of the UK because most of my best friends are British. And I spent some of the best years of my life living in London. Happy birthday to Queen Elizabeth. She turns 96 today, and I believe, Anna, correct me if I'm wrong, has she been on the throne for 70 years now? I see that Mattel has issued a special edition. Well,
let's just clear that up.
No, it's Mattel has just issued a special edition Barbie doll to mark her platinum jubilee.
Well, I'm sure that will be very popular in some circles. I should point out, in my diary, it's listed as June, but that's because she has two birthdays.
She has an official birthday in June,
That's important to note. So happy birthday to her. Maybe I should have been focused on that, given I am here in London. But there's also other serious business to watch, and we're watching what's happening in Ukraine, of course, as we do day in, day out. The focus very much on Mariupol. The Russians have said that they have now taken that city under Russian control, but we know that the Azovstal steel plant still has, well, the Ukrainians say, at least 1,000 civilians there and troops. We'll focus on that as well. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Worried about what we're going to see in terms of the economy in the second half of the year as rates go up.
I think we have to really look and see where global yields are heading.
When you see yields do what they've done so far this year, this has been the worst year in the history of statistics.
The longer part of the curve looks pretty appropriate. I think we can expect the Fed to try to move up the short end.
The Fed is clearly in uncharted territory.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Live from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. Equity futures up 0.7% on the S&P. TK coming up, Chairman Powell and President Lagarde.
Yeah, it's going to be interesting to see what the central banks do. And, of course, this is within the World Bank and IMF meetings as well. It's a fairly quiescent screen. But, John, I would suggest there's a ferment under all of this, including resilient equity. John, you got to tell me what to do with with a resilient 10-year yield, I mean, it's a changed landscape that Lagarde and Powell face.
A big move in the bond market so far this year and more recently as well. Tom, big moves in the equity market too this morning. Decent numbers from Tesla after the close yesterday, including United Airlines as well. The earnings have been tremendous. United Airlines of 7.5%. Scott Kirby, who we'll catch up with a little bit later this morning, saying the demand environment is the strongest he's seen in his 30 years in the industry. That's how strong things are for those businesses going into summer.
Well, that's sector to sector after the Netflix debacle yesterday. David Kostin darkening the door here at our world headquarters yesterday, and in talking to Mr. Kostin, John, he makes clear it's single digit, but it's pretty good single digit earnings growth. What's wrong with that?
Yields higher. 10-year yields up 4 basis points to 287 on a 10-year. Bramo, it's not just the US Treasury market reacting, it's the German bond market leading with an ECB conversation about rate hikes, getting some more fuel from various speakers.
Yeah, the vice president of the ECB coming out and saying that he could end some of the bond purchases by July, setting up for rate hikes. Right now, we're baking in 75 basis points of rate increases over in the Euro region. You can argue whether that's realistic. What I see interesting is that the long end has a bid because there is conviction that the Fed and the ECB can tame inflation over the longer term. John, a lot of people do wonder what it will take to get there, whether they can ease into that or whether it will be something a lot more dramatic, a la what we have hearing out of Deutsche Bank.
I have to admit, I've struggled to get my head around the idea that we might have a positive rate at the ECB before year end. That's something I'm still struggling with, Lisa.
And just to put this in a perspective, that would be the first time since 2012. And sure enough, you are seeing yields on the front end surge to close to around that time. Honestly, how do we get there, considering the fact that they are hiking into deceleration, into an ever more unclear scenario, especially with what happened in Mariupol overnight?
TK, the German 2-year up 9 basis points this morning.
That's right where I would go, John, is to let the market solve this for Lagarde and to see those yields lift across the curve. The German 0.14% on the 2-year. It's still odd, John, not to see a negative statistic on the Bloomberg terminal. The Swiss 20-year, which I talk about, nobody else cares. The Swiss 20-year, John, is one big figure, 1.00%. That signals how far we've come in the change landscape for Lagarde.
You overindulge, Tom. It's okay. Just keep looking at the Swiss bond market. We have no problem with that at all.
I do. I look at it from Brasserie Leap there in Zurich.
I bet, yeah. Well, we've done that together before.
A cappuccino costs $14.
Ridiculously expensive. Equity futures this morning up 0.7% on the S&P, up 29 points. On the NASDAQ, a rebound really yesterday. Some of those stocks around the Netflix story. Even John. Facebook, Tom. Facebook Meta got hammered yesterday off the back of those numbers.
Yeah, go to Lisa on the wall because I got to get briefed on Arsenal.
You're busy.
Please. Yeah,
ahead of Kit Jukes. Up 4 basis points on a 10-year. Bramo, 287 on a 10-year yield.
I want to use that. Go to Lisa on the wall. I picture myself pinned up against the wall and telling you what's going to happen in the day ahead. Look, there are a number of really important events. The flagship one, obviously, being what we're going to hear from Christine Lagarde and Fed Chair Jay Powell. 8:30 a.m., a read on the U.S. labor market, U.S. initial jobless claims. We're talking about a fully employed America, or are we? How much do we continue to talk about that at a time when the participation rate has not gotten back to where it was? Does the nature of the conversation change as the jobless claims go ever lower, given the fact that so many people still are on the sidelines? We still have not climbed back to pre-pandemic participation rates. 9:45 a.m., we hear from President Biden. He's giving an update on the latest in Russia and Ukraine. I am particularly interested today because Russia is claiming they have taken over Mariupol. That is the key land bridge between Crimea and Russia. How much does this change the nature of the conversation and, frankly, what the allies are willing to do in terms of what they're supplying Ukraine, as well as what kind of red lines and sanctions, further sanctions, they can impose? And at 12:50 p.m., this is what I am watching. Fed Chair Jay Powell and ECB President Christine Lagarde, they're speaking at an IMF seminar. We've been talking all morning. Let's take a look. 2-year yields climbing in Germany to the highest levels going back to 2014. This really is the question mark. Can the ECB truly raise rates, John, 2 or more times this year, given the fact that people are still talking about stagflation and still talking about much bigger recession risks in Europe at a time when Germany, when other nations are actually seriously talking about banning oil from Russia? How does this work, John, without torpedoing the economy?
Elisa, thank you. Let's fold in China as well, Tom. Nomura overnight modeling a 3-handle on Chinese GDP for 2022. They dropped their forecast for this year down from 4.3% to 3.0%. 1.9%, given everything that's happening with this country.
Yeah.
You have to believe, Tom, that some of that spills over into Europe and elsewhere.
In the economic sphere, away from Ukraine, John, I do say this is the biggest issue out there. How will China adapt and adjust? And one of the untold stories, John, of the last 3 days is the give back in renminbi from 6.37 out to weaker yuan, 6.45. Yes, it's managed. I'm not going to make a big deal about it, but it bears watching.
And let's kick off the conversation on foreign exchange with Kit Jukes, the chief FX strategist at SocGen. Kit, your words, on track to tighten unless the elephant gets in the way. What's the elephant?
The elephant is the war in Ukraine. At this point in time, and particularly the price of natural gas in Europe and whether it continues to flow. Natural gas is cheaper now than it was at the start of the year, but I don't know how to quantify the risk that either the war escalates significantly or just it drags on and has an impact on growth, or more directly, economically important, not humanly, the gas taps get turned off, or even temporarily, at which point the European economic outlook deteriorates dramatically.
Kit Jukes, are we seeing big country depreciations against the dollar now that going to lead to an immediate instability, or are we truly away from some of the fears that are out there about depreciation as a tool?
I think getting your currency weaker is less powerful than it was, 20 years ago, 30 years ago. So it's not as good a tool. So it's not quite as scary. But the dollar's strong, and this is going to have an impact as other people join the party. And it can all it can get out of control if, for example, the Chinese don't go for a 1.5% fall in their currency, but go for a 30% fall by their currency, and then the yen would weaken further, the euro would weaken, and then you get a snowball effect where you get a much too strong dollar, and we're back in 1985 again.
So, Kit, where is that threshold, especially at a time you talk about China? We are seeing renminbi weaken versus the dollar. We are seeing these other currencies. What's the threshold where it becomes a problem for the global economy, for the dollar?
I think it's a move of more than 10% as a sort of starting point. Anything less than that is very exciting for people like me. I don't know how much it really rolls the global economy, but if you had a 10% move in the yuan, and if the Japanese let the yen weaken another 10% as a result of that, we're talking 140 nearly on dollar yen at that stage. The Europeans feel that pretty hard, so euro dollar goes and has a look at the other side of parity. Then I think you might hear something from the Treasury in the States, and the whole thing could start getting more political. So,
Kit, just to jump in, you spend a lot of time with some really smart people in foreign exchange, Stephen Jen, Mr. Goodhart, many others as well. When you have those conversations at the moment about the ECB, do they believe that they can get rates back above zero this year? Because when we hear from a lot of people, there seems to be some pushback. I'm just trying to understand if people in London and people in Europe, if they actually believe that could happen this year.
I think some people do, and I think particularly, certainly I speak to economists who look at what's happening, who just look at the data, who detach themselves from what's going on in Ukraine in the sense of just looking at the hard data at this point in time and the inflation numbers. And some of them certainly think that there's a rate hike coming, that there's a cycle, that we need to normalize policy, that there's a lot of inflation that the ECB can't tolerate. But everybody, I can't imagine there's anybody out there who doesn't gulp and say, yeah, but, and it just requires so much to go well. If you could stop a war overnight, great. You don't want to have any kind of follow through. You want the bond market to be all good and calm. You don't want spreads to blow out and so on. So it's a big stretch, but I think people would like it because it would reflect a world that would be, be a super world, frankly. I'm having trouble. I mean, that's obvious. The elephant is in the way. It needs to move.
Kit Jukes, wonderful to catch up, buddy, as always, of SocGen on the foreign exchange market and everything happening worldwide at the moment, Tom. There are some skeptical minds out there, let's put it this way. We've been living with this rate story in Europe for so long that it's hard to shake the psychology, Tom, this idea that we can get positive again.
Well, in Keynes, I mean, when the facts change, I change, and that's where we are right now. There's no question there's been a seismic shift over the last 90 days, and how do you recalibrate to it? Frankly, John, I'd bring it right over to equities, and as you mentioned, United Airlines, with a glimmer out there. The fact is, we've got these frameworks of what higher yields mean. To Lisa's point yesterday, are we anywhere near restrictive? No, we're not. And does the higher yields mean doom and gloom? And that's the raging debate of this late April.
Elisa, build on that. Just how close to restrictive and what is restrictive in the bond market?
Well, how can we even talk about the beginning of restrictive when we still have negative real yields? Yes, they have not actually managed to stay above zero. And you have inflation that's running above 8% if you take a look at CPI. That is clearly not restrictive. How high does it have to go? And how long does it take before the transmission mechanisms start to respond? Because they're not really yet, except for in the housing market, perhaps.
A little bit later, we'll catch up with David Balin on this of Citi.
I'm going to go to tears there. She was going along the x-axis. Oh, my God.
Equity futures up 0.7 of 1% on the S&P. Yields higher by 3 or 4 basis points to 286.70. A little bit later, Chairman Powell and President Lagarde. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Ritika Gupta. Russia's President Vladimir Putin has declared that his forces have seized the key Ukrainian port city of Mariupol. It would be the biggest city taken during Russia's 2-month invasion. Russia's defense minister says more than 2,000 Ukrainian troops are still holed up in an industrial complex in Mariupol. Putin's demanding that those troops surrender. The U.S. Justice Department will appeal a federal judge's ruling that threw out a mask requirement for public transportation. That sets up a legal fight that could last beyond the midterm elections. Many airlines have now dropped their own mask rules, but some transit operators have left the requirement in place. And shares of Tesla are rising today. The electric vehicle maker reported better than expected results for the first quarter. It easily beat estimates with a record profit. Tesla CEO Elon Musk predicted that output will grow at a fast rate the rest of the year, despite those supply chain issues. And in China, President Xi Jinping has defended the country's reliance on lockdowns to fight the coronavirus, despite mounting economic woes. Xi reaffirmed the underlying goals of minimizing deaths in a video-linked speech to an Asia forum. China's in the midst of its worst COVID outbreak since the beginning of the pandemic. And billionaire investor Bill Ackman lost more than $430 million on a 3-month bet on Netflix. Ackman's Pershing Square Capital Management sold its Netflix holdings after the streaming TV pioneer reported an unexpected drop in customers. Shares plunged some 35% on Wednesday. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
what's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
The Indian city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds. Season is here.
A moment of multiple crises.
Bloomberg is fastest with the numbers and analysis.
You do have some good news and bad news.
It's a good time to own volatility.
Bloomberg, the fastest numbers and analysis you trust.
The first priority is to make sure that there is support to fill this financing gap in Ukraine over the next 3 months. Let me stress, the $5 billion is to keep the economy functioning. It is not to meet the reconstruction needs of Ukraine that are going to be huge.
Kristalina Georgieva there, the IMF Managing Director from New York City this morning. Good morning. Futures are positive 0.75% on the S&P. The numbers from the earnings of Tesla, United Airlines, looking pretty decent. That gives this equity market a lift on the Nasdaq 2 up by more than 1%. The euro catching a bid. Euro stronger. Euro dollar a 109 handle now. 0.6% into positive territory off the back of some comments from the ECB Vice President Luis de Guindos, talking up winding down QE by July and maybe shortly thereafter, Tom, raising interest rates.
No, part of the dialogue there, and a really eventful end of April to get us moving forward here. And of course, part of this is the World Bank. Talking to David Malpass yesterday of the World Bank, the managing director was at last week in Washington, and now the IMF meetings. Anne-Marie Horton is at the meetings in Washington and joins us this morning. Maria Tadeo in an eventful Brussels, and of course this with Dombrovskis coming up with us here in moments. Maria, I want to go to you. Robert Kagan, writing in the must-read new issue of Foreign Affairs, talks about spheres of interest. What is the Russian sphere of interest at the end of the Baltic Sea, and how immediate is that for Sweden, Finland, Estonia, Dombrovskis, Latvia, and finally Lithuania?
Well, Tom, I think before you even get into the Baltics, Finland, Sweden, I was there, remember, yesterday in Helsinki. It is very clear to me now that these two countries are going to apply for NATO membership, and they're going to do it very quickly. If I had to put a date on it, by June, they will submit this application. But, Tom, the reality is those are big aspirations for Russia. That could be the ambition, perhaps, yes. But at this point, we see that Russia is just not capable of conducting a full-scale military war in Ukraine. And the whole focus for the Russians right right now is in East Ukraine, and it's in Mariupol, and it's in Donbass. I think we have to be very real about the capabilities that the Russian Federation has. I mean, they talk big, and of course, there's a lot of bravado, but on the ground, we see that today, they're not capable of fully taking Mariupol. Vladimir Putin came out and said today, okay, we've conquered it, we're just going to leave that steel plant on its own devices, but what it reflects is that they have not been able militarily to fully conquer Ukraine.
Emery Horton, in your Washington, and obviously the focus on President Biden, there is Ukraine, there is the land bridge Lisa mentioned from Russia through Mariupol to Crimea. I guess there's a land bridge in order from Russia to Kaliningrad, the exclave that they have. How do we weigh Ukraine versus the northern Eastern European front?
Well, first, we know that this is an historic mission in terms of Ukraine for President Putin. In terms of the northern front, this is something that he wants to protect in terms of interest. As you mentioned earlier, Tom, he definitely does not want the likes of Sweden or Finland to be joining NATO because he believes that this would be encroaching on his sphere and his protective space, if you will. But when it comes to Ukraine, this historic mission, Mariupol, although Maria is correct, there is this steel plant that has about 2,000 individuals in it, and Sergei Shoigu, his defense minister, has said that they're still held up. Putin responded with, I want it completely blocked. I do not want a single fly to be enter this steel plant. So he's saying that he has liberated Mariupol, and we should note that this has been of concern of allies because Mariupol will connect Donbass to Crimea, and this would give Putin a very strong footing in eastern Ukraine, something that he has not been able to do as of yet. And at the same time, you have the President of the United States speaking this morning around 9:45 a.m., and what we are expecting is more military aid.